Good morning, everybody. Welcome back to another episode of the Market Open. We are here once again, Wednesday, April 9th. April 9th is officially the day that the China tariffs have gone into effect. I was up pretty late last night, like some of you might have been. It was kind of hard to go to sleep. If you were up last night, it was pretty bad across not only equities, but the bond market. Right now, it's gotten a little bit better, even though yields are still relatively high. And that is what's causing equities to go down in the pre-markets. You have the S&P 500 right here down about 1.2%. At one point, we were down about 2.5% in the pre-markets. That has recovered. Last night, again, was just not really good. We'll talk more about it in a second in terms of what happened. But the 10-year bond went over 5.9%. The 30-year bond went over 5%, which made it feel like there was a decent chunk of selling in the bond market. We don't know exactly who was doing the selling. We don't know if it was a hedge fund that is blowing up right now, and we're kind of seeing it in real time in terms of them liquidating their bonds. We don't know if it is a foreign entity that is retaliating against the United States by saying, hey, we're just going to sell your bonds, which is going to be really bad for you and inflation and rates in the United States, but that's our way of retaliating. We don't know what it was, but it did happen last night, and as a result, stocks definitely took a hit. Now, this morning, why are stocks continuing to be down, even though that recovered a little bit? Well, we officially have a response from China to the 104% tariffs that we're seeing today, or that we saw yesterday, which is an 84% reciprocal tariff on all U.S. goods from China. So, I don't even know what to say at this point. I don't know what to say. I mean, this is just fascinating to see in real time. Absolutely fascinating to see in real time. Good morning, everybody. Thank you all for being here. Yeah, it is weird. It is very, very weird to see how this all is playing out right now. Hard to have a word for it. Pure cinema is the right way to do it. Or the right way to say it. But I don't know. It's one of those things where, like, even I'm left speechless. I personally did not think we would have 104% tariffs imposed on China. Like, for the past couple of days, I was like, they're not actually going to do it. They're not actually going to do it. But they did it. And as a result, China's retaliating. And now we have to see what the heck the stock market is going to do to kind of price in what the heck's going on. I mean, like, just Apple alone makes this story so interesting. Apple actually up a little bit right now in the pre-markets after going down 5% yesterday. But how does the market react? What is the market going to do? And who's going to capitulate, right? Who's going to basically say first, yeah, we're like, someone's got to come to the table when it comes to negotiation. I don't know who's going to come first, but Trump and China basically have said we are not coming first. This is like the third round from each of them on different tariffs for additional and reciprocal that they're deploying. America 104%, China you had 84% today, and eventually someone's going to have to hold out. All right, so I want to get straight into a couple of different things. We got a lot of tariff coverage coming in terms of the day. You got a lot of people across the entire stock market reacting to it. Not only the stock market, but also Congress and the White House. Bessent just did a big interview on Fox, so we'll take a look at that for a little bit. But we also have a ton of other different people that are live. I think we'll get started with this. Vlad actually just did an interview, so let's listen to a little bit of that. He also touches on tariffs. This is the Robinhood CEO, Vlad, so let's get to that real quick, and then we will keep going from there.
Exclusive interview right now, global financial crisis, if not the biggest. And obviously markets don't like uncertainty here. And I think we all probably forgot in our collective consciousness that this was part of the first Trump administration, the tariff policy. And now we're waiting for clarity on the tariffs.
We're now in it. Let's talk about that, because you put out a tweet over the weekend. You said one great thing about the tariffs. There's not a lot of great thing about tariffs, but maybe there are. You said one great thing about tariffs: they can be modified or removed as quickly as they were introduced.
As soon as I saw that tweet, I think that was Saturday night, I realized, oh, Vlad's made up his mind, and it's that tariffs are not the right way. I mean, if the tweet is, hey, the best thing about these tariffs is that we can reverse them, he's obviously voicing his opinion that he is not a fan of these tariffs, like a lot of other CEOs on Wall Street that just really don't like this idea.
Yeah.
So yes, all of this could ostensibly change with a tweet. But at this point in the ball game, do you think that is in the offing?
Yeah, so it probably wouldn't surprise you to hear that generally speaking, I'm a fan of free trade. I mean, obviously, Robinhood does it on a retail level, and free bilateral trade, I think, is important. Now, I think what's tricky here is that when that trade is not bilateral, if there's restrictions that other countries impose on us,
Right.
and we're not doing something about that, then we can get into a tricky situation. So I think the equilibrium where we end up is hopefully going to be something close to bilateral free trade.
How much, if that's the
I think that's what, again, a lot of other CEOs are saying as well. So, I mean, his core thoughts right there, you can see not necessarily a fan of the tariffs thing with Blackman and a lot of other business leaders we heard from over the past couple of days. Everything's still red in the pre-market. There's some pockets of green. Palantir right here is green, which is nice to see. By the way, I will be doing a spaces with Chad and Iliano from Palantir at 12 p.m. Eastern on Twitter. So that'll be just audio, and we're going to be talking about tariffs and kind of software, its role in tariffs, what it means for Palantir. So we'll be having that discussion. But a lot of other stocks are red. Palantir, one of the only ones that's green. Broadcom's green a little bit. D-Wave's up a little bit. Everything else, MicroStrategy, Hims, Archer, Oklo. Tesla's kind of green, up 1%. We're seeing individual pockets go green, which is interesting. Some of the more growthier names, like a Tesla and Palantir, but the S&P is still red. A little weird, but we'll see if that turns into a trend for the broader market. Here's Bessent this morning on China's 84% retaliation against our 104% that went into effect last night.
President Trump's reciprocal tariffs. Those tariffs took effect last night at midnight, including the 104% tariff on China. Joining me now is U.S. Treasury Secretary Scott Bessent. Mr. Secretary, thanks so much for joining me this morning.
Morning, Maria.
Well, I want to start right there. Give us your reaction to more escalation coming out of China, taking their tariffs up to 84% on top of President Trump's retaliatory tariffs.
Well, Maria, I think it's unfortunate that the Chinese actually don't want to come and negotiate because they are the worst offenders in the international trading system. They have the most imbalanced economy in the history of the modern world. And I can tell you that this escalation is a loser for them, that they have some very smart, the economists, the academicians, technocrats within their bureaucracy, and they would be telling the leadership that we do not have the edge here. They are the surplus country, that their exports to the U.S. are 5 times our exports to China. So they can raise their tariffs, but so what?
So let's talk about this for a second, because
that's an interesting response, right? So he's like, okay, they can raise their tariffs. So what? We don't really care because we do 5x the exports from them. But I mean, at what point do they say, all right, we don't care either? And then the US says we don't care. And then China says we don't care. And then it just kind of goes back and forth. I mean, like, is this a trade war? Or is this just a complete disbandment of trade in general? I think that's going to be the really interesting thing to see over the next couple of months in terms of how that plays out.
Because I wonder, I agree with you. I mean, I think that China needs the United States so much more than the U.S. needs China. But the economies are so connected, Secretary. We're buying all this cheap stuff. People expect things to be cheap. And we know it's because they're made in China. And it feels like a soft war right now with China. Are there any areas or opportunities to give companies the time to move those supply chains to America so that we don't have to rely so much on China? This can't happen overnight, right? Even though China is the enemy, the number one adversary, and we are in this soft war and they're escalating this right now, are the near-term effects such that the U.S. gets impacted negatively first?
Again, Maria, no one wins in a war, but it's proportionality, and the proportionality for the Chinese is going to be much worse. And the other thing too is, Maria, what would be a very good step with the Chinese would be acknowledging that the precursor chemicals for fentanyl come from China. They make their way into North America and then are sold into the U.S. We have more than 100,000 American citizens dying every year. And so China, a very good start would be for them to make a gesture on the precursor fentanyls, because, distributing drugs in China is punishable by death. Why don't they apply the same standards to the people who are exporting these chemicals to the U.S.?
Yeah, well, it's true.
Oh boy. You heard Scott Bessent literally say, no one wins in a war. It's a war now. It's like, really? So it's all right. Here we go. It's a freaking war. That's what we're doing now. It is a tariff war. By the way, further in that interview, it was about 20 minutes. Bessent gets asked about, would you remove Chinese stocks off U.S. exchanges? He said, everything is on the table. I mean, they probably weren't going to, he wasn't going to not say that. Everything wasn't on the table, right? So this is probably what he has to say. But still, I mean, the idea that we would remove Chinese stocks or they would start removing American stocks from the exchange, I mean, there is a lot of different ways this can play out. Like just so many different routes it can go in terms of bonds and yields and what China allows, what the United States allows from China. I mean, like each one of us are going to have different levers that we have to pull. Right now, it's just been tariffs, 104% versus 84%. I mean, what happens then? What happens when it's a lot more than just raising percentage points on tariffs? You know, what happens when countries say, "Hey, we're banning certain people from your country to come"? It's like, it's just weird, bro. It is weird. And last night, so let's talk a little bit about what happened last night in the bond markets, because this was also really scary for anyone that was awake. I was up until like almost 3 a.m. last night, and I was just kind of seeing how this was playing out. At one point at 12:01 a.m., the 10-year got to 4.5%. This is weird because stocks should not go down, or stocks should go. Stocks should not go up when the 10-year goes up, but the 10-year theoretically should be going down when stocks go down as well. And it just didn't happen, which led people to believe, wait a second, like who's selling all these treasuries? How is it a firm? Is it unwinding? Is it China? What's going on? And then the 30-year hit 5%, which is not supposed to happen either. And so it was just a mess. Now the China 10-year is also decimated. I believe it's below 1.7% right now. So it's not like their debt is in the best situation either. And this is going to definitely affect them. But I mean, dude, we have a very, 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 very advanced economy. If they were to, put a hole in that economy in some meaningful way over the next coming months, I don't know what this means for stocks. And I also don't know what this means, again, for earnings guidance, which is going to be coming up in the next, week? April 15th, we start earnings. What does it mean in the context of what it would do for financials? Wouldn't selling treasuries bring the yield down? No. So when you sell treasuries, that it works inversely to the yields, and that brings the yield up. When you buy treasuries, which is what we've been wanting a lot of countries to do, we want the bond market to do, that gets yields to come down. This goes back to that thesis, right? That Trump's trying to mess up the stock market to get people to be so afraid of stocks, so afraid of taking a risk on Nvidia at 85. They go straight to the bond market and they say this 4%, 4.2% is guaranteed for 10 years. I'm going to lock that guaranteed rate in because that's less risk than having to deal with Nvidia. China's selling, and probably some other countries. Yeah, I think that as well. I mean, there was a lot of theories last night that a fund is blowing up. And it's so crazy to be in the point where it's like, holy crap, is a fund really blowing up? Are we like in 2008, you had Lehman Brothers, all that stuff. Like, I don't know if it's that bad. I would imagine it's hopefully not, especially because it can be reversed and fixed anytime soon. But that's the fear right now. Also, here's a stat that came out from JP Morgan yesterday. So the largest group of investors that bought in March was retail. $40 billion of inflows in March from retail. This is $10 billion higher than the previous all-time high posted at the beginning of the 2022 bear market. So retail bought the dip. And I don't know if that's going to, obviously that'll be probably the right decision over the next 5 years. I don't know if it's the right decision over the next 5 months. Is it possible that financial institutions are getting margin calls? Yeah, that's exactly what I mean. So there is an argument that you get some financial institutions that were probably short bonds, and then they were probably buying something else on margin. Then that stock that they were buying ends up tanking, maybe in Nvidia. You have Palantir right here up 3.3%, and then they have to cover their short, aka they have to sell their treasuries. Like there's just so many different ways that this could be playing out, but we don't have enough clarity on it yet. Bitcoin's still holding on, 2.5%, 76.9. Again, it was much dire at 2 a.m. last night when the news was breaking and the 104% officially went into effect. Even today with the 84% reciprocals, it doesn't feel as scary as it was last night because bond yields have come down a little bit and we're seeing a maybe pre-market bounce. But maybe that could also turn into a dead cat bounce like we saw yesterday. Amid, if China sells all their treasuries, are we screwed? No, we're not screwed. I mean, we're just like not in the best situation. So I put up a chart last night. China owns about 760 billion of our treasuries. The United States ourselves offer about 28 trillion in public debt. And the UK, Japan, and China own the most of it. Japan owns $1 trillion, UK owns 765 billion, China owns 760 billion. I don't think they will liquidate their entire stake. That would be insane. If they do, I think we'll have to deal with it, but I would hope that doesn't happen. Trump was speaking last night at some Republican GOP event. Here's what he said about China.
Tariffs on Chinese goods are in place effective midnight tonight at 104%. Until they make a deal with us, that's what it's going to be. I think they'll make a deal at some point. China will, they want to make a deal. They really do. They want to make a deal. They just don't know how to get it started because they're proud people. China will now pay a big number to our treasury. This is all taxes. And don't let them keep telling you that this is a tax on our people. I hate that. You know, they say it's a tax. No, often much of it is paid. And hey, look what happened during my first term. We had no inflation, and yet I took in hundreds of billions of dollars in tariffs and taxes from China. No other president got 10 cents in tariffs or taxes from China. I got hundreds of billions of dollars, and I still got along with them because they understood what they were doing was wrong. They understood it. It's when you explain it, they sit up, they say, I've had numerous leaders tell me, you're right, sir. I was waiting for you to bring this up. Because some of the trade deals that were made by predecessors as president were so bad, you almost wonder who did these deals. They were either crooked or stupid. They can be nothing else.
That's what you got last night from Trump in the context of China. So he's just straight up, you know, yeah, the China. I mean, like, it just goes to show you the level of excitement he has about this strategy and the fact that he thinks that this strategy is going to work. Here's one more clip of him last night. This was him kind of bragging about the negotiating and how well it's going. Obviously, that negotiating not happening yet with China.
The first 4 years, we had the most successful country in history in terms of economics. We had 88% increase in the stock markets. We had an 88% increase. There's never been any president that had an 88% increase. We had 88%, and there were a lot of happy people. And I think we're going to do much better than that this time, because this time I'm doing what I want to do with respect to the tariffs. I think we're going to do much better. And just remember the numbers. When you get up to $2 billion a day, $2 billion a day, they're saying, sir, can't be that, can it? I said, yeah, it can. It's the biggest transaction ever made. This is bigger than any deal. You guys, some of you work for companies. Your companies are peanuts. I don't care how big they are. Compared, this is the largest transaction in the history of our country. And don't let some of these politicians go around saying, you know, because I'm telling you, these countries are calling us up, kissing my ass. They are dying to make a deal. Please, please, sir, make a deal. I'll do anything. I'll do anything, sir. And then I'll see some rebel Republican, you know, some guy that wants to grandstand, say, I think that Congress should take over negotiations. Let me tell you, you don't negotiate like I negotiate. Congress takes over negotiating. Sell America fast, because you're going to go busted.
Yeah, that was the tone of last night's endorsement from Trump coming on tariffs. A lot of you guys are saying in the chat, you can't believe this, dude. I feel I don't. You know that David After Dentist video? Have you guys seen that on YouTube? It has like 200 million views. In the video, the kid's in the back of the car from his first time coming out of the dentist, and he's just like, "Is this real life?" Farzad says, "Admit, try not to look too excited." The kid's like, "Is this real life?" And the dad's like, "Yeah, this is real life. You're living in the real world." And I'm like, "Is this real life?" I don't know, dude. It is absolutely. It's just wild. It's wild. It's just like, it's one of those things where I think everyone to an extent is feeling deflated, right? Everyone to an extent is just feeling a little defeated in terms of, all right, this is the new reality. We really have no control over it. Jason and I talked a lot last night. He thinks that, you know, we're getting into some serious downturns, and he thinks that another 10, 15% is not crazy to imagine. Just given that even after this downturn that we've seen, S&P 500 still trades at 18 times earnings, forward earnings. And one could argue if we just take the tariffs to their logical extreme, and like now, by the way, it's not just it's not just China last night. It's all the reciprocal tariff rates that he put up. If we take them to its logical extreme, then yeah, that is going to affect earnings. And if that affects earnings, if 18 times forward earnings is still a little bit too much, and we go to what, 16 times, 17 times, there's still more multiple compression. So there's all the countries, including Cambodia at a whopping 49%, Iraq 39%. I mean, just across the board, all of these. This is how Trump gets his $2 billion a day in revenue number, which again is fine. If tariffs actually create $2 billion a day in revenue, amazing. But what are the impacts of that $2 billion going to be in regards to domestically in the United States and what that means for our cost of goods, products, etc.? The EU just agreed to put tariffs on the US. Okay, so let's see if there's some headlines here on the EU. I think the rumors here have been that the EU is getting ready to reciprocate with like 25%. Yeah, EU adopts tariffs on 21 billion euros of US goods and metals. That happened just now. Bessent said at 8:55, China are only the country that's escalated on trade. Yeah, okay, so this is an issue because we've been talking about China the past couple of days and this morning. Now it's not just about China. Now it's about the EU. And the EU hasn't gone as far as putting like a 40, 50% tariff back on the United States like China just did this morning at 84%. But if they say, all right, maybe we can sell some of your bonds, or maybe we want to do 40, 50%, and like we're not able to negotiate with the EU, how are we going to negotiate with China? It's going to be really tough if we don't get a deal with one of them. All those deals, by the way, Bessent said, oh, we're working on 70 different deals with all these countries. Yeah, none of them were announced yesterday before the April 9th deadline. So if they're working on them, they're going to have to take the tariffs off those countries in the coming weeks if they even have a plan to meaningfully get rid of those tariffs if they get to a good deal. So nothing was announced that Wall Street necessarily loves around the progress of tariffs. And I think that's also one of the biggest issues right now. Yeah, I mean, as of now, the deals are imaginary. They're not real yet. The Fed is not speaking today. I think there's a couple of Fed speakers that are speaking potentially, but the Fed themselves is not. Again, a lot of people are questioning this idea of, all right, is it time for, a bailout? Is it time for the Fed to actually start printing money? We'll talk more about that in a second. Let's get an update right here real quick, but the TLDR is I don't think Jerome Powell can save us here. And if he does, it's going to be really hard for him to get away with it.
Neil Kashkari from the Minneapolis Fed. He said the Fed's first priority must be keeping long-term inflation expectations anchored. So the bottom line is he's saying that the hurdle to change the funds rate, either way, by the way, up or down, has increased because of these tariffs. No monetary policy response, up or down, he does say, should be completely off the table. A rapid end to the uncertainty or a sharper downturn, quote, could lead me to revise my outlook. He says tariffs are much higher and broader than expected, and he sees a larger direct economic effect and a larger shock to confidence than he had expected. That shock to confidence, again, could have a larger economic effect. And he goes through some of the...
So that's Kashkari this morning basically saying, hey, not only could this have an effect on inflation, but the shock economically, which has an effect on supply chains, cost of goods, all that stuff, that could have a bigger effect than the inflation from tariffs itself.
Economic effects here. Prices could rise, real purchasing power of consumers and businesses declines, investment declines, GDP growth ends up smaller, and unemployment higher. I'll leave it there, other than he says adopting a simple policy of looking through the tariffs could be risky. David, I'm hearing a lot of discussion about whether, when the Fed could come in. I'm bringing you these Kashkari comments because they echo what I've otherwise heard from others at the Fed, which is that the Fed cannot act immediately here from rates. There are several facilities the Fed has set up. If there are liquidity issues, I'm not hearing anything immediately about liquidity issues. However, the question is being asked whether they might do something, if needed, that might be something along the line of market asset purchases like they had in the pandemic.
AKA buying treasuries like they did during the pandemic to get yields to come down so that rates could come down, which is stimulus. It's money printing, right? So I think it's too soon to say the Fed's going to do it. We fall another 10, 15% in the markets. Maybe they really consider it. The May probabilities for a cut, by the way, which were like at 14% on Monday, they're at 53%. May 7th, not that far away, less than a month away. And so the fact that like these probabilities have gone this high, Mark is just like, well, someone's got to do something about this. And if it's not going to be Trump because he's gung-ho about tariffs, then it might end up having to be the Fed themselves.
When certain treasuries, certain securities could not be sold, but we're not at that point right now, but people are asking the question.
All right, Steve, I assume you can hear us. Just stand by because Jim was
Yeah.
making a point.
I
want to
just
come back
got
to
off
you.
the phone with my best bond guy who is swinging
Yeah.
around more than anyone in this country. And he says,
Yeah.
of course there's liquidity issues. That's exactly what's happening.
You know,
Yeah, and again, the liquidity issues is scary. Also, you know, we haven't had a bank run yet, right? We haven't had a, remember 2023 Silicon Valley Bank failed? And it was so weird because at the time, like that felt kind of scarier, like a full bank failing, and then First Republic and all that stuff versus this. But because like, I don't know if you can necessarily reverse when a bank fails, which is this, like Trump could announce anything, you know, in any second that could reverse a lot of the stuff. But still, that it felt like that was a little bit more serious. And we haven't seen that happen yet. We haven't seen a fund blow up yet, and we haven't seen a bank fail yet. And if that happened, and that, obviously that would happen based on a credit problem. We have seen credit spreads rising, which is not good. There are a lot of different actors that are on the short and long side of credit default swaps. And so it's just a really, really weird time. I think the following next coming, I guess I would say months and previous months, they're going to be studied in history. I mean, this is a decline in the stock market that is now well documented in the context of how self-inflicted it was. And I think this is going to be up there in terms of, especially if it gets worse, the ones that deserve to be studied over the long term. Now, having said that, as bad as it feels, stocks aren't really dead in the pre-markets. And so we may see a little bit of a bounce. How crazy was it yesterday? It was definitely a dead cat bounce, right? But by the time it was obvious that the tariffs were not going to be negotiated, which was basically 1 p.m. yesterday, and that the press secretary confirmed 104%, the market just flipped red yesterday. And we closed again below 500, but we're decently enough red yesterday, still red in the pre-markets. It wouldn't surprise me as well as if we have another sympathy relief bounce just for whatever reason. Wouldn't surprise me if you gap down either. NVIDIA right here is up green, 2.5% in the pre-markets. Apple as well, a little bit of green, a little bit of life. Bitcoin, 76.9. That's not bad. Palantir up almost 4%, which is nice to see. But a lot of stuff is also pretty red. Sachin says the tariff wars have reached the point where either both parties sit together ASAP or markets will break somewhere, something that will spin off into an absolute weird, uncharted waters. Yeah, I 1000% agree. Like I if we don't get a deal soon, or if Congress doesn't step in, or if I don't know, just if there is some level of, okay, we're going to normalize relations, even if we don't come to a perfect deal right now, it just feels like something's going to break. No one knows where. No one knows if it's in the bond market, the equity markets, if it's like massive margin calls, if it's somehow in the housing market, who knows what pops up. Like this could send economic shocks across the entire country. And again, it's going to be really interesting how stocks open today because, yeah, they were down badly last night. They're making a pseudo recovery right here in the pre-markets. If they can actually continue to recover and we can close green on the day, I think that would be really exciting. But the idea that it would happen right now is hard to necessarily see. Fear and greed as well is at 3. I think that's the lowest for the entire cycle. I don't think we hit 3. I think 4 was the lowest, right? But it's not even like if it feels like, oh my God, there's all these good deals because everything's extreme fear and you want to be contrarian. It more so just feels like everyone has no idea what's going to happen. And so the idea that you could be contrarian here and buy the dip and easily understand, all right, well, no one knows what's going to happen, but I'm still going to buy. Yeah, that's fine. But it's also scary because it's like, you just don't know. You really just don't know how it's going to play out. Let's get back to Vlad. Let's finish some of his interview and then we'll keep going from there as well.
Case and you think that there's a rainbow on the other side of this, how much pain do you think that you, on a either personal level or just you think the American public, your consumer is willing to take to get there?
I wouldn't necessarily make a prediction about how this is going to go. I think there's a certain aspect of this which is a negotiation, and I'm not as privy as the folks in the administration about how that is going to play out.
Right.
But I mean, there's definitely a belief that it might work among some folks in the administration. So yeah, it's hard to say though how long it will last. My guess is that it'll have to be resolved before too long.
Well, so I think you look at what is happening on the retaliatory side with China, and it's unclear how quickly this could get resolved. And then there's a question, if you're going to make all these bilateral deals individually with each country, this could take a very, very long time. My question to you is, in terms of, we wake up in the morning, oftentimes the market's down a couple percent. At what point do you think that this spills over into the quote unquote real economy? We're going to have CEO of Delta on in just a little bit, Ed Bastian. And it sounds like potentially this is already spilling over into their version of the economy.
Yeah, I mean, obviously, the longer the tariffs go on, the more companies will have to adjust. And I think part of the hope is that over the very, very long run, this leads to increased U.S. manufacturing domestically, more factories, more things being built here. And I think to some extent, we all want that. Short term, I think there's uncertainty here. So we're all watching.
How much you watching Treasury auctions, for example? I mean, one of the things we've been watching is the 10-year, and there's now speculation. If you're China, do you want to be owning U.S. Treasuries? Are you going to be buying U.S. Treasuries? Are you going to be dumping U.S. Treasuries? I mean, sort of how this all starts to play out in terms of also internally within this sort of financial plumbing of our universe, which is, does this start to spread into other places, private credit, other places in our market?
Yeah, I mean, there's been a long-term trend around foreign ownership, foreign purchasing of U.S. Treasuries going down over time. Probably over the last 10 years, that's been the trend. Short term, I think, we've seen it be volatile, but you also have counterbalancing factors. For example, if we get crypto clarity and stablecoin legislation, that creates a new market to some extent for U.S. Treasuries, particularly overseas.
The problem is that stuff just might not happen as soon as we want it to happen. And so the easiest resolution to a lot of the issue with our yields versus our equities is just like getting to a deal with China. I mean, it would be funny if we get to a deal with China in like, I don't know, a day or two. I feel like we would have a massive rip. Even if that rip is a sell the news type of rip, it would just be an insane rally because the market would finally have certainty around the fact that our biggest trading partner is not going to have these types of tariffs on. And I mean, dude, the FOMO during that rally would be crazy because everyone would think, all right, this is the moment where things change. And like, we can save the bull market, like we had one for 2 years. We just want to save it. We just want to save it. And this, I feel very seriously, this entire scenario is threatening the nature of the bull market. Like, if this goes to its logical extreme, I don't know how easily there's a bull market. I mean, you got Ken Griffin coming out yesterday, big supporter of the Republican Party and supporter of Trump. Now similar to Bill Ackman, Vlad, all these big Wall Street guys saying, hey, tariffs are a huge mistake. And Griffin said it's hurting the middle class. Now, on the opposite spectrum, you had Kevin O'Leary, who loves tariffs. He wants to go even higher to 400%.
104% tariffs on China are not enough. I'm advocating 400%. I do business in China. They don't play by the rules. They've been in the WTO for decades. They have never abided by any of the rules they agreed to when they came in for decades. They cheat, they steal IP. I can't litigate in their courts. They take product, technology, they steal it, they manufacture it, sell it back here. Never has an administration.
400% tariffs? What would that
I
look
want
like?
Xi on an airplane to Washington to level the playing field. It's just not about tariffs anymore. Nobody has taken on China yet, not the Europeans, no administration for decades. As someone who actually does business there, I've had enough. I speak for millions of Americans who have IP that have been stolen by the Chinese. I have nothing against the Chinese people. They brought great literacy, art, and tech to the world. The government cheats and steals, and finally, an administration, you may not like Trump, you may not like his style or his rhetoric, finally, an administration that puts up and says enough. 400% tariffs tomorrow morning. He'll tell you why. Xi can only stay the supreme leader if people are employed. If we wipe out any business there, because we are still 39% of all consumables on Earth and 25% of the world's GDP, America is the #1 economy on Earth with all the cards. We will not have that forever. It's time to squeeze Chinese heads into the wall now.
Well,
I'm
hold
not
on
talking
a
about
second,
tariffs
Kevin.
on
Well,
60
I hear you, but hold on. If we're talking about people, the average consumer, not necessarily the head honchos of businesses all across the globe, can they withstand the pressure of that sort of tax on the
It's
goods they're going to have?
short-lived. There will be
But what's your timeline compared to, you don't know the average American's timeline, what they can actually survive. There's people right now who can't survive
400% tomorrow morning, cheese on an airplane to Washington to cut a deal.
All right. Let's see who you guys agree with. I mean, dude, the thing about Kevin O'Leary, and I like his segments, is because he's like, he's convincing. Like, you can listen to him to an extent, right? He's convincing. He's like, it's Shark Tank, all that stuff, right? He talks for a living. But I think his central argument, which is, hey, let's crash China's economy because that'll get them to the negotiating table, and let's just decimate their economy, and potentially the byproduct of that would be getting rid of Xi Jinping. I don't know, dude. I don't know if this is the way. I just don't know if this is the way. We got 4 minutes until the market opens. Let me ask that question right here in the chat. Do you agree with Kevin O'Leary? And it's a radical approach to saying, hey, let's screw up everything. And as a result of screwing up everything, that'll solve the issues. I don't know. I don't know if it will. And there's an argument for, like, yeah, that is the best form of negotiation, but how much pain in the meantime are they willing to tolerate? Play out. Okay, so here's the question. Do you agree with Kevin O'Leary? I would say the majority of Americans, if it affects their jobs, their cost of goods, their labor, they're probably not agree with that. But then again, there's a subset of Americans that do. And the ones that do, obviously, are the reason why Trump is able to continue doing what he's doing. Also, Trump did say yesterday at that GOP conference, I am not the president of Wall Street. I'm the president of Main Street. I wish he said this stuff before he got elected, bro. Or the day after he got elected. Like, if the day after he got elected, he said, I'm not the president of Wall Street. I'm the president of Main Street. I would have been like, oh, cool. Interesting. I will keep that in mind. I will actually potentially take that very seriously, because then I don't got to be part of Wall Street right now if you're not the right president for it. Like, but he's saying it after. Does the audio suck? Does the audio suck? Hold on. I'm telling you, the tariffs, they got my mics, bro. Does the audio suck? No, the audio should be okay. Let me switch it real quick. We got 3 minutes till the market opens. Switch the audio from this to this. I think that's okay, cool.
So we're watching both sides of this, of course.
In terms of retail flows and in terms of your own customers on Robinhood, what is your sense? And by the way, you now run a prediction market as well on there to some degree. What is the perspective you think that the retail crowd is thinking about? These are mostly young people who have not necessarily lived through a crisis before.
Yeah, so it's interesting. I think in the past, when I've been on your show and we've been through these types of events, I've told you retail has been net buyers of assets. They're buying the dip. And part of the reason for that is because Robinhood didn't have as many ways to short the market for active traders. We still don't have equities shorting on the platform. You can only go long equities by and large, aside from ETFs and other things. But now we have futures. We've just rolled out a feature on options, which makes it easier to get into to execute on multi-leg options trades through our side-by-side chain, which has been working really, really well. So now I think a big part of the reason is we just haven't had all the options for our active traders to trade. So there's a mix. There's certainly some people buying the dip, but there's also active traders that are trading the market systematically on a retail basis.
Let's put.
All right, here we go. Let me know if the audio is not working. I think it should be good, but we are officially now at the point of the day where the stock market is now open. April 9th, 9:30 a.m. Eastern. Wake your ass up. Here we go. The stock market is now open. S&P 500 opens up down 0.34%. All right, so that is a lot better than last night. Last night we were down 2.5%. Futures were very ugly, 494 on the S&P 500. If we can claim that $500 level, that would be nice to see. That would be up another 0.44%. Not the worst open for the S&P. Google actually goes green. Intel down about 0.33%. That is just below tangible book volume. Robin at 34.05. This was at almost 30 last night. Now it's at 34. So again, a little bit of recovery right there. Palantir's up 1.44%. Next Decade's down 1%. Venture Global is down 2%. Tesla's green. Tesla, Palantir, and I believe Nvidia are indeed green. Grab is green. That's up 4% currently right now. Nvidia 98.23. That's up 2%. S&P still falling even further, even though Apple, Nvidia, Palantir, Robinhood, and Tesla are green. That's really weird, and that also really feels like we should be getting some momentum to the upside on the indices in a bit if those continue to hold. TLT down 1%. TLT just decimated. If anyone got into this as safety in the 90s, this one is just not yet proving to be safety. I think it eventually has to work out because we got to get those yields down. But TLT right now going the opposite direction. The Qs right here just went green. All right, there you go, 0.25%. Sorry, the Qs are green. So that's actually a 0.43%. The S&P, very close to green. Very close to green. Having said that, we literally experienced this yesterday. It was a little bit more blistering green yesterday, and it ended up being a massive bull trap. It's just you just don't know, right? Like if you sold last night at 12 a.m. because you were afraid of the world falling apart, it's not falling apart yet. If you bought 2 days ago because you didn't think it would fall apart, it did fall apart to an extent like this. It's weird right here, but things are going green, and that's what's making this market hard. Did it make sense to sell last night? Maybe in the next couple of days, but as of this morning, not really. Robinhood right here, 34.68. That's up 1.4%. Palantir 3.5. You got Carnival Cruise going up as well. Yeah, a lot of you guys are saying dead cat bounce. I can't disagree. I would like if that didn't happen, but I can't necessarily disagree. Why is it going up? Well, where's the 10-year? I think if yields are coming down, that's probably your best bet for why stocks are. No, yeah, well, okay, so so the 10-year's at 4.38. Let's call it 4.4. It's down from 4.5 last night, but it's still up pretty aggressively. 12 basis points right there. I don't know why stocks are up or why some of the growth names are up with the 10-year surging like this. What is a dead cat bounce? It's basically a moment in the markets where we're in a downtrend. We get a reversal. You think that the reversal is actually going to hold, and it doesn't. So it's a dead cat bounce. I don't know exactly why they call it a cat. I don't know why it's like cats bounce, right? Like I don't know exactly the logic behind it, but that's the concept of it, right? It's like you bounce up, you think it's real, and then it turns out to be dead. And I don't know if America has more than 9 lives when it comes to these dead cat bounces, because we've had at least 3 major dead cat bounces over the past couple of weeks. Kangaroo market. Yeah, I think CNBC had that headline yesterday as well. It's kangaroo. It's kangaroo-y. Admit it's because a dead cat doesn't bounce. Okay, that makes sense. Because why would a cat bounce, right? So it's yeah, that actually helps make sense. But like it feels like that's the type of the market that we're in. KMI right here up 0.12, Broadcom's up 2%. Look at this, all the quantum names are green too. Oklo, energy speculative name, that's up. Archer is up, MicroStrategy's up, Amazon's up, HIMS is up, PayPal's up, TQQQ is up. The indices are very close to going green. Nvidia right there 2%, Apple 2%, Rivian 1%, and then Celsius 1.17%. as well. Newsmax takes a beating, down 7%. All right, so we got some of the IPOs coming down. That's good. This one's officially at its low for the year, $36. This one probably 14, 15. I think is closer to fair value. Most of the stocks are green. Is there any positive news? No, I don't see any. To be honest, again, for those that are just joining, China's retaliating with 84% tariffs. I don't know what the headline is to make any of this momentum occur, even the little bit of green we're seeing in Tesla and Palantir and Hood. We're SoFi. SoFi should be up right now. SoFi's flat. But we are seeing a little bit of reaction. Look at the S&P. It's very close to going green. It is not hit green yet. I think, there you go. She goes green. S&P goes green. Yesterday, there was a 6% intraday move on the S&P. couple $1 trillion exchanged hands by the time we ended up going red for the day. But we were up 4% and then came all the way back down 2%. Also, dude, we have CPI tomorrow. We have CPI. Like, I just realized, holy crap, we have CPI tomorrow. CPI is going to be big. I mean, like, we cannot afford to have inflation come in higher than expected. And I mean, has anyone seen oil prices? Like, I would think inflation is starting to meaningfully come down. Oil has reached the lowest level since COVID. Since COVID. Look at this. 56 on WTI. 56.80 on crude, down 5% this morning. That's good for all companies. That's obviously very good for inflation. But also, it is one of those things that is signaling, hey, maybe the market is really afraid if they're pricing oil this low about things that are happening. We do have bank earnings that start this Friday as well. JP Morgan, Bank of America, we're going to start to get some more clarity from them. Jamie Dimon did come out this morning and he said, this is bad and we're likely headed towards a recession. Ken Griffin said the same thing. Bill Ackman said the same thing. And then Larry Fink said the same thing. So, and all 4 of those individuals, I believe, voted for Trump. So I mean, it's not even a political thing. It's just them saying, hey, this is like just not good. This is just not good. Gold is up right now. You got gold. Wow, gold's up 3% on the day. Even gold's moving in this momentum. Google just went red. Nvidia still up 2%. Apple up 1.7. Apple flew 5 airplanes from India yesterday. This was a real article filled with iPhones, MacBooks, laptops, and all their other products because they wanted to avoid the tariffs in India. Like, I didn't believe the article when I saw the headline. Then I clicked. I was like, oh my goodness, this is real. I thought it was China at first, but it was actually India where they flew out the iPhones from, not China. 5 airplanes of phones to avoid tariffs. It's just like, it's insane. Mr. Beast said it's now harder for them to produce chocolate in the United States because of the tariffs, increasing their cost of goods by 20%. So the biggest YouTube streamer in the world who has a chocolate brand is like, yeah, this tariff stuff is affecting us as well. We have to outsource it now. I mean, it is just an incredible thing to witness how this is playing out. Enphase right here is down about 4%. Intel's down 0.5%. Google again down about 0.23. Bitcoin 76.9. Robinhood just went red. Poundshare looks like it wants to go red. Same thing with Tesla. S&P 500 could barely hold on to the green. We are back down 0.5% on the S&P. Back down 0.5%. Really did not have any momentum to sustain itself, but it is getting hit. Trump just tweeted, did he? Well, let's check just to make sure. He did tweet something this morning. Oh, no way in hell. No, guys, there's no way he said this. There's no way he said this. Oh my goodness. Okay, my interpretation of this as an investor is potentially a bit different. Okay, all right, so here's what he said. I'm just going to show you guys. You guys are going to think the same thing I'm thinking, but the average person who doesn't know about the stock market is not going to think the same thing we're thinking, but this is ridiculous. This is a great time to buy DJT. Immediately what I thought when I saw this is, oh, he's telling you to buy DJT stock. Now, I thought this because I cover the stock market. You guys cover the stock market, right? So like when you see DJT, you think of a ticker. The average American who doesn't know anything about stocks, they're going to see this and they're going to see DJT as his initials, right? Donald J. Trump. But there is S&P just goes green. There is a S&P goes green after Trump says this is a great time to buy. I think the first thing all of us think is, oh, and look what's pumping, baby. DJT up 4% within minutes, or within seconds, because he just tweeted it a minute ago of him tweeting that. This is actual insanity. I really don't know what to say. As soon as I saw that, I think he's saying to go buy DJT stock. Again, a lot of people are not going to think that because they might not know DJT is a stock, but I'm pretty sure all of us immediately go to, is he just, if he had put the ticker symbol, like the dollar symbol next to the D in DJT, which typically refers to a ticker when the dollar's in front of the first letter of the ticker, I don't even, because then it would have been explicit. Then it would have been like, yeah, like it's crazy. Oh my gosh. Yeah, it's illegal. It's disgusting. Is he allowed to, is the president of the dude, freaking Jerome Powell can't say if he thinks it's a good or bad time to buy. Trump is allowed to say, like, this is, it feels like a simulation. Yes, I agree. I mean, that's probably the best way to describe it. Let me see if CNBC is covering this at all. this is a great time to buy. Now, technically, does that mean he knows there's a deal that's going to get done or something? Like, is he saying that, or is he purely saying that just to say it? I don't know, but this is incredible. Here's a news update from the White House, and then we'll keep going from there.
No comment from the White House yet on the Chinese retaliation or this new EU retaliation that we've just gotten. But we do expect maybe to see a response from the president at some point this morning on his social media platform. That tends to be the way that the president reacts to these things, and we expect we might see that relatively soon. So for right now, no comment, though, from the White House on the EU retaliation, guys. Back over to you.
All right. So once again, we write the checks to farmers. We're quite used to doing that. I am not hearing what I most feared, which I feared levies against major American tech companies. This to me means that Europe is not going to be as adversarial as I feared. And believe it or not, I think it is positive what you said. When as soon as we limit it just to pharma.
We'll go back to that. By the way, speaking of pharma, Trump said last night explicitly the pharma tariffs are coming. So that sector, pharma and semis that were excluded from the initial tariffs, yeah, Trump is definitely getting ready, as per his words last night, to bring out the pharma tariffs. Nvidia's green. It's up 4%. The S&P, oh my goodness, it's up 1%, above 500. Everything's green. Robinhood's up 3%. Like, imagine selling last night because you saw the 10-year spiking and you were afraid of just what would happen to the equity markets. And then the president tweets, it's a great time to buy. This is what, like, the concept of even having a clue of what's the next catalyst in this market. Because, by the way, I don't think this is a meaningful catalyst. Trump said it's a great time to buy. Okay, like, the market's pumping on that. That seems ridiculous. I wouldn't expect it to last. If it does, cool. But the idea that you could plan for that or trade within that is just insane. Everything's green. S&P, there you go. 500, Nvidia 4%, Apple 3%, Rivian's up. I mean, you are seeing everything just get momentum. And obviously DJT participating in that. Wow, it's up 7%. I'm not crazy, right? When you guys saw that tweet, you thought as an investor, oh, DJT is, he's saying to buy DJT. That's literally what I thought as soon as I saw it. And if he is, which it definitely feels like he is to me. I mean, he never signs DJT, right? He never signs a tweet DJ. When is the last time Trump signed a tweet DJT? Like, I think I've seen pretty much every tweet he's posted over the past like 4 or 5 months. I've never seen him end off a tweet with DJT. If you just put the ticker symbol in front of it. Also, by the way, if you were reading, this is ironic. If you were reading the 8K that the DJT uploaded, I believe 2 weeks ago, they filed an amendment that allows them to sell a lot of stock. They had a lockup period for a long time. And now that lockup period is starting to, it went away by the end of September, but now it's starting to open up in general. But I mean, if this is trying to get some exit liquidity, it's insane, dude. You can't be the president of the United States, even with the hint of suggesting to buy something like that. And maybe it's technically not illegal if you want to find whatever technical loophole or whatever, but it's obviously something that no one wants to necessarily see. Fartcoin right now, let's check on that. That's down 7%. Interesting. So market's ripping after Trump says it's a great time to buy. And the asset that you would think would explode in a meme-oriented tweet like that is down, even though Bitcoin's up. I don't know. And when does this rug get pulled? Because I don't think the Trump tweet pump in the morning is going to be enough to last throughout the day. Maybe it is. S&P already giving up some of the gains. There she goes. Not below 500. About 0.3% away from going red again. Same with NVIDIA, from up 4% to up 2.5. Still holding on to some of its green, but it is going down. Farcoin front running the market. Yeah, exactly. Oh my gosh, dude. I'm sorry, dude, but I can't. This is similar to the meme coin stuff. Like, I think at some point you're just like, what's going on, right? There's a lot of good policies I agree with in this administration, but the idea of pumping a meme coin or potentially pumping your own stock, especially because no institutional investor on the planet is going to buy DJT. These are literally all basically Trump supporters that would be buying that stock. and eventually get it dumped on them because it's not going anywhere. Just to give some context, Truth Social does $2 million in revenue. They do $400 million in losses. That was their trailing 12 months. Their market cap is $4 billion. I mean, it's obviously not the most attractive entity to look at. The S&P 500 right there, 498. That's up 0.32%. Still up, but getting a little hit. Mateo says, surely you like the meme coins more than the tariffs. Shout out to Mateo. He's a crypto OG. Yes, no, I will say I would pick meme coins over the tariffs any day of the week. Like if we had to pick between those two, yeah, give me the meme coins, dude. Forget the freaking tariffs. It's only 9:45. It's only been 15 minutes since the market's been, dude, it feels like it's been 5 hours since the market's been open. It has literally been 15 minutes. Nvidia right here, just up above 2%. S&P is about to give back all of its gains. As it is very close to going red. That would be funny if he tweets, I mean a pet. Oh my God. It's a good time to buy a pet. Is the tweet still up there? Let me see. Did he delete? It's still, yeah, it's still up there. And 10 minutes before that, he said, be cool. Everything is going to work out well. The USA will be bigger than ever before. Oh, wow. He tweeted a lot this morning. He then said, it is imperative that Republicans in the White House pass the tax cut bill now. Our country will boom. Republicans, it is more important than now than ever that we pass the one big, beautiful bill. The USA will soar like never before. Make America great again. He then says, this is a great time to move your company to the United States of America, like Apple and so many others in record numbers are doing so. Zero tariffs and almost immediate electrical energy hookups and approvals. Yeah, I mean, he's just saying anything right now for the narrative to get a little bit better than it is. Granted, I did think the stock market would be hit a lot more this morning based on futures last night. S&P, there she goes, red. I don't know if this Trump tweet pump is going to last at all. I really doubt it, but we're starting to see markets go red. Robinhood, very close to going red. Palantir still holding up 2%. Bitcoin right there, just above 77,000. Where was DJT, the meme coin? Hold on. We didn't even look at that when this was happening. Trump coin. No, this is a different one. Well, look at this, dude. There is a Trump coin. Holy crap, dude. This is how crazy the crypto markets are. There is a Trump coin. It's not the official Trump coin, but because of that tweet, it is up 90%. Because of that tweet, look at this. This coin was worthless. It was 0.000119 cents. You guys see this chart right here at 9:40. Trump says the tweet, it goes up by, I believe, 1,000%, a little bit more than that. You guys see this chart, right? This is insane. The trading volume was 300,000. The average trading volume is 5,000. It 150x'd because of that tweet. People are probably searching for DJT crypto. It popped up and then they just started trading it. That's how insane it is. The actual Trump meme coin. Hold on, let's go to that. The actual Trump meme coin is up 3%, even though it's down like 90%. He did not delete it yet. Yeah, it's so easy to manipulate people, right? It's just so easy. So freaking easy for people to just find something and then think that actually is how it needs to go. This is weird. This is weird. Let me see how stocks are doing. We got a lot of other headlines I'm looking at right now to try to understand what's going on. DJT still green. S&P just went green again. A lot of choppiness right here, but it's holding on to just a slight bit of green. Cactus Jack says 500K. Someone's trying to pump and dump it. Yeah, 4 million market cap. I mean, it's incredibly low liquidity and basically similar to a penny stock. This is just wild, bro. This is so crazy, dude. It's real life, folks. It is real freaking life, and it is happening in front of us. It is happening in front of us in real time. JP Morgan cut a bunch of estimates this morning as well. I'll get the exact prices, but I mean, they cut prices on Meta, Amazon, Netflix, Spotify. It's just across the board. They put out today that we're cutting targets based on tariff impact and a reshape of our estimates. CNBC just put up the Trump tweet. Okay, let me go to them. I don't think anyone knows how to navigate this, bro. This is a different level. Like, can you guys believe this is happening? Like, it's like I was thinking about that last night. I was like, is this actually like this is real? Like this is like happening? Especially when I saw the 10-year go up the way it did. I was like, wait, so this is really indeed happening. Earnings season shall be fun. Yeah, it very much shall be fun. The S&P though holding up. I wouldn't be surprised if we close like not really green today, but just slightly green, given the past couple of days have been so bad. But I also don't see any like logic for why we would actually close green. Oh my gosh. Trump literally campaigned for tariffs this whole time, dude. I don't think anyone thought it would go down like this. I think obviously some people thought it might be a mess, but I think people thought it would be 10 or 20% across the board, and that's it. This headline came out from Walmart this morning as well. They are pulling their operating income guidance. In a news release, the discounter said it wanted to maintain flexibility to invest in price as tariffs are implemented. It did not provide a new range for first quarter operating income, which is pulling guidance. It had projected an increase of 0.5% to 2% to adjusted operating income in the fiscal first quarter. Most of Walmart's stuff is from China. So, yeah. I mean, I was watching a clip yesterday that said Apple's EPS will reduce by $2 from 7 to 5 if the tariffs are in place the way that they currently are. That's a pretty big EPS hit from $7 to $5. And that's just assuming the tariffs. That's not assuming any of the other craziness that could potentially be taking place. I mean, it's just one of those things where it's pretty damn incredible. What's the latest news on Tesla? There's not really that many updates on Tesla outside of Peter Navarro and Elon going back and forth yesterday. Tesla right here up 4.5% though, so that one's going green again. And the Peter Navarro stuff was really interesting because like Elon so publicly is going against one of Trump's biggest advisors. Obviously, Trump is seeing it, and it is developing a bit of a rift. I mean, I would imagine that it's developing a little bit of, okay, so there's going to be this major disagreement between Elon and Trump, even if they agree on a lot of other stuff. And as a result, it's obviously going to affect sentiment around it. Oh, Tesla. Oh, this did happen last night. Tesla Model Y. I believe the prices are down by 10 grand. Like the model started at 52. Now it's starting at 41, something like that. So that I did see last night, which is really interesting because they just reduced a ton of Model Y prices, legacy Model Ys. Now they're reducing the price of the new Model Y. Like, yeah, maybe that demand is not that well. I mean, we have had Dan Ives say over the past couple of days that he thinks if something's not done with Tesla in the next 90 days, there's going to be some serious permanent damage. And those prices going down is probably emblematic of the fact that demand is not necessarily in the best situation. Here was Dan last night on Bloomberg about Trump as well.
Needs to leave the government. I mean, because if you look at the brand damage, you just cannot deny it. I mean, I think there's 20% actually permanent brand damage in Europe, 10% at least in the US. So when he's pushing back, because look, Musk, he's getting calls from Fremont, from Austin, from what he's hearing in China and Germany. No one's probably more plugged in, along with Nadella and along with Jensen, obviously Cook, than Musk. So he knows tariffs, it's a disaster across the board. And it's our view, it sends the tech industry back a decade if these tariffs actually hit.
And on the other hand, Tesla's more insulated than the others on tariffs, right? So what I tried to distinguish in your note is those forecasts you gave on demand loss. You said 10% globally, but more severe in China and the EU. That's not really a tariffs issue, right? It's a reputational issue of Musk's association with Trump. Just explain your modeling.
Yeah, I mean, Ed, unfortunately, Tesla's become a political symbol around the world, but in a bad way, right? I mean, if any frustration toward Trump, Doge, tariffs, globally, there's one symbol, it's Tesla. And, Musk obviously went into the government, in terms of Doge and everything we've seen. And we've talked about it. It's at least a $100 overhang in the stock. And I think when you look at trying to model it, there's brand damage, there's tariff issues. and you're just trying to take stabs at it. I mean, they just came off of a disaster 1Q delivery number. And, as someone that's been such a long-term bull, and remember, we didn't lower our rating, still maintain our bullishness on autonomous, on robotics, and the future of Tesla. In my view, it's been a sad few months to watch it, because it's brand destruction by the hour, by the day. Can't deny it.
Dan is not a happy camper. Dan is not a happy camper. I don't know. I don't think you can blame him either, dude. Dan has been bullish for a very long time. He's defended Elon through all the ups and downs, through the Twitter acquisition, all that stuff. But obviously, he's seeing the writing on the wall, and the writing on the wall with these tariffs is not in the best situation. It's not in the best situation. Now, granted, again, Tesla, I don't think it's. I still believe that there is a lot more to that business than the car business. And like, Dan is such a good analyst for Tesla because he's always analyzed it more than just as a car business. I think he's just realizing that the brand damage, the tariffs, and Elon being at Doge, when you combine all those together, it's just a really tough spot, along with the fact that the next earnings is not going to be the best. Now, granted, if we actually see some serious decline, like, I don't know, 180, 190 for Tesla, I do think there's going to be buyers there. I think people long-term still really want this stock. But the uncertainty makes it tough. Makes it very, very tough to navigate. Why are we green? Well, there's two reasons. A, bond yields are coming down a little bit. Actually, they're down from last night at midnight when they spiked, but they're still up for the day. And then that Trump tweet where he said it's time to buy. I mean, I guess to an extent, that's why we're green. Tesla's amazing option premiums. Yeah, I mean, even in the face of all the volatility, the option premiums on tomorrow are on Tesla are still pretty damn good, especially when it has these big spikes on a day like today. CPI tomorrow is irrelevant. It is relevant, but it also feels irrelevant, right? It's like, yeah, like we need a good CPI. NVIDIA right there crossing over 100. But now with tariffs, that is one of the reasons it's irrelevant, is because if tariffs are going to jack up inflation across the board, then this current CPI, which doesn't take into account the future, probably isn't that relevant to tell us what's going to happen in the future. Robinhood right back up to 3%, 35.35. Palantir 80, almost 81, up 4.5%. Obviously, we don't know if this is going to last, but it bounces up, bounces down, bounces up, bounces down, just in the midst of the certain ranges that they're all trading within right now. It's transitory. The market is green so it can catch its breath before it goes underwater by close. Dude, that's been the story of every day though, right? Where's the VIX? Where's the VIX? The VIX volatility index is down 5%. That's good. It was above 50 last night. Oh, yesterday, this is a crazy stat. The S&P 500 having a 4% move intraday and the VIX closing above 50. Last time that happened was 2008. Last time we had that level of volatility in the context of not only the VIX, but the intraday move on the S&P to such an extent. Yeah, that was a long time ago. Wait for the 1030. Okay, yeah. I mean, yesterday, didn't we see the 1030 hit? It recovered a little bit, and then by 11, it was just all gone. And by 12, it got a lot worse yesterday. But there was a bit of a 1030 slam that we saw. What did Jason's technical analysis say yesterday? So Jason is pretty bearish. He thinks he thinks it's actually very similar to COVID 2020 in terms of the shape of how this could play out, which could be like a really steep downside quickly, but then we move forward. I mean, the last time we fell 20% peak to trough, it was about 27% in 2022. It took some time. Like it took a year for it to play out. I am of the opinion of just like, let's just get it over with, right? If we're going to have some nasty decline, let's let it not be draw down for like an entire year. Let's just get it over with in like a week and like then hopefully try to recover over the coming years. But this is what it looks like. .com bubble, it took 50% to go down 30 months, it took 30 months to go down 50%. Great financial crisis took 16 months to go down 57%. COVID took 24 days to go down 35%. Then 2022, it sucked because it took 11 months to go down 27%. We have gone down 20.6% in the past 35 days. So it's kind of like, all right, we're already down a lot from the previous in like 1/10 of the time that it took the other ones, 1/20th of the time, really. Maybe we just get it. It's like ripping the Band-Aid off, right? You rip it off and then you move on. Do we have data at 10 a.m.? Let me see if there's any economic data. But I'd rather just rip it off. Wow, S&P 502. Okay, so that's actually going green right there. Tesla up 5.3%. I'd rather rip it off and get it over with and then move on from there versus it be a super long drawdown. Do we have any data at 10 a.m.? We have mortgage rate comes in at 6.61% versus 6.7. Okay, mortgage rates come in below 7%. That's good. Obviously, that's because the 10-year came down, but I don't know if the next week mortgage rates will stay the same because the 10-year is now up. That could be helping the S&P right now. Mortgage applications, I believe it says we're up 20% versus expectations. Wow, yeah, look, the mortgage index 292 versus 243. Huh. A lot of that could be fueled by refinancing as well. Let me see if we can get some coverage on this. That's actually a pretty big number. I could see how the markets might feel bullish about that. Let's go to this and then let me try to get some more updates on this mortgage number.
Highs at 4.365%.
Yep, a lot more to come on that. Another volatile day of trading, of course, as well. We've got wall-to-wall coverage of what you need to know this hour. Eunice Yoon is live in Beijing. She's going to have the latest on China's moves regarding tariffs. Angelica Peebles is tracking the big moves in pharma. This as President Trump plans new tariffs for that sector. Phil LeBeau, he's got the airlines, of course, following that pulled guidance from Delta. But let's start with Rick Santelli, who is tracking that action in the bond market. Talking a lot about the basis trade during the last hour as well, Rick. I know you've got some data for us as well.
Yes, let's start out with the data. This is the February final for wholesale inventories. Mid-month read up 0.3. It remains up 0.3 and up 0.3. Well, up 0.8 was January to give you perspective, and the end of last year we were minus 0.7. If we look at trade sales, this is a fresh number, expecting up 0.8. Buckle up, multiply that by 3. 2.4%, up 2.4% to find a higher number on sales. You're going back to March of 22, very solid. And last month's minus 1.3 gets upgraded only minus 0.9. And as David Faber pointed out, lots of action in the Treasury complex. And by the way, 39 billion reopened 10s go for auction 1 Eastern. There's an auction you don't want to miss. Yesterday's 3-year wasn't a good auction. And with today's movement, consider this. We settled at 430. We're currently at 436, up 6 basis points. You know what the high yield was? 451. Now, everybody out there is talking about liquidity, and some say we have a liquidity issue. Others say we don't. I used to trade. This is an easy one. Liquidity, well, it's how many 30 seconds you need to move a certain amount of size in the market. The bigger that distance is, well, the less liquidity there is. So when you look at the ranges, that should smack you right between the eyes that with those type of dramatic moves in the last 10 hours, there is a liquidity issue, but there's not necessarily a liquidity crisis. David and the gang, back to you.
That sounds very similar to Silicon Valley Bank, right? There was a banking issue, which is why they collapsed First Republic, et cetera, but there wasn't a banking crisis, which theoretically, yeah, there might be some liquidity issues, whether it's with a country or with a hedge fund, but it might not be the biggest hedge fund in the world, aka not being the biggest issue. S&P is green, though. Entire market's green. I mean, it looks like the market really liked that mortgage data. It looks like the 10-year coming down from the highs of midnight is positive. There's a way you can put the pieces of the puzzle together to say it makes sense for the markets to be green. I don't know if it makes sense for it to hold necessarily, especially if it's because the 10-year hasn't. If the 10-year flips red, then I think we could potentially actually like stay with this green throughout the rest of the day. But the 10-year is not going lower yet. Yeah, nothing makes sense, dude. Oh my gosh. Dude, President Trump gave financial advice. This is a great time to buy. Like, everyone's so afraid. They say, oh, this isn't financial advice. President Trump freaking tweeted, this is a great time to buy. DJT. I mean, the president of the country said it's a great time to buy. I thought the meme coin was the biggest thing that would surprise me, but this is a different level. Let's get someone onto the show to help us analyze what's going on in the semiconductor region. He hasn't been on the show for about a month. He's been busy. He's been traveling, but he is back. We're going to try to keep him here every single week and reserve some of that juicy semi coverage for my market open. Jose, what's up, man?
What's going on, man? I missed you. It's been a while.
It's been a while. I cheated on you with Tanner for the GTC event, so we missed each other there. But we got NVIDIA earnings coming up pretty soon.
Definitely. I mean, pretty interesting time in the market, to say the least, right?
Okay, so for those that don't know Jose, he has a YouTube channel. I'll put it in the chat right now. He is very big in the semiconductor space. He's been in NVIDIA for the past 5-10 years, and he pretty much has dedicated a good chunk of his life to analyzing those companies. Jose, first question for you. NVIDIA, did you ever think it really could get back to the 80s? And are you buying here, or are you worried of the tariffs and the impacts on NVIDIA?
So I'm not worried here for NVIDIA in forms of tariffs impact. I don't know if you got a chance to listen. Microsoft had their 50th year anniversary and the birthday, and there was an interview with CNBC, and the two current CEO of Microsoft and two old CEOs, Bill Gates being one of them, and Steve Ballmer, I believe is his name, the other. And when they were asked about what they're going to do right now with tariffs, the paraphrasing is continue to invest in AI, because that is what they believe is going to be the next big growth driver. So obviously this is just Microsoft, but I'm going to guess all the other big tech players have the same mindset. I don't think anybody's going to let go on the brakes of AI spending. Maybe you might kind of see small hiccups, but I think in that long-term trend, AI spending is still going to be some crazy, crazy levels. And then if I'm buying, I saw you purchased a nice amount of NVIDIA. I see you're now a nice shareholder of NVIDIA. Have I been buying? I've been buying a lot of kind of, I don't know if you're familiar with this, but since I do have sponsorships with certain platforms, I can't buy a stock if I mention it for 2 days or stuff like that, because they don't want me to kind of like pump the market. But I am buying kind of like ETFs that are very leveraged, not leveraged, that have a lot of exposure to kind of companies like NVIDIA.
You're doubling down on the semi exposure right now.
Yes, 100%. It seems dumb, right? Obviously, stocks can continue to go down, and I'm not necessarily a perma bull. I believe in the long term, prices will be higher, but I also believe in the short term, anything can happen.
Okay, so here's my question.
Yeah.
Have the tariffs and the impact of tariffs not shaken any of your conviction on this whole CapEx AI trade in general?
On CapEx AI, no, definitely not. I think we're going to continue to see, there's just this massive competition going on right now in AI, and whoever lets go of the brake first is going to be the loser in this AI race. And more importantly, in the cloud infrastructure, some people might say, who cares about large language models? But more importantly, in kind of the cloud infrastructure, which is a money-making scheme already, a money-making business already. Whoever has the best chips or the best platform, the best performance is going to kind of get the most market share. So let's say Microsoft stops investing in cloud infrastructure. I'm going to gladly bet that Google and Amazon would say, yeah, go ahead, stop investing. We'll gladly take that infrastructure servers and build it ourselves, because in the past quarter earnings, they mentioned that if they had more infrastructure, they would have grown their cloud their cloud businesses faster. So if
if we get into a recession, can Google still justify spending extra even if Microsoft's not?
Can it justify it? I don't know. So that's the thing, right? So I think the market will react one way, and I don't know how that reaction would be. But in the long-term thesis, usually for especially technologies, if you make a hiccup or a mistake, it's not a mistake you're going to see right away. It's going to be a mistake that eventually starts to eat up a quarter, 2 quarters from there. So while maybe the initial reaction of maybe someone, who knows, I don't know how the market's going to price it. Maybe Microsoft says, look, we're going to slow down in AI investments. Maybe the market might like that. And you might see kind of like whoever does it first, see a positive reaction. But I believe that long-term effect out of it would be something that I think investors are not going to be happy about. So how the market might perceive it is one way. How the business is going to be, if it does it, it could be completely opposite of it.
So we have Nate in the chat right here who says, dude, companies will dive deeper into AI in a recession. It will allow for cheaper labor, thus cheaper growth. Do you think if things hit the fan from an economic perspective, there will be companies and foreign governments that say, maybe this is the time we double down on AI to kind of fix the issues that we're having right now?
Yeah, I think maybe usually in the in like the government sectors, they're a little bit slower from time to time. I think if you do see it, you're going to see it more from like these public industries and the public companies and kind of like the private industries. And also tariffs are also I think tariffs is so much uncertainty is coming with this because every company has a whole different supply chain mix. So it's like you could be, the market I think is pricing, I think this is where opportunity comes. The market is pricing like everybody has the same supply chain and everybody kind of hits the same markets, even in the semiconductor industry.
Right.
But NVIDIA, for example, they've talked about it. They have already a lot of manufacturing in parts of Mexico already. The way they classify products might be products that could be exempt from it. And it's all about classification, where the production has its final form, pretty much to say that impact tariffs. And all that is kind of driven by the overall supply chain that they have, and every company is completely different. So I think this is where opportunities are born, where the market doesn't know how to price everything correctly. And if you have maybe a small edge on understanding the supply chain from one player, it can definitely benefit in the long term.
DJT right here, guys, up about 9.2% on the day. This stock is getting a big move to the upside. What are your favorite semis right now? If you had to pick 3 or 4 that you like the most, Jose?
If I had to pick let's say 3, NVIDIA definitely makes the list. This one is, there's never a no-brainer, but how I follow this market, this is kind of like the closest thing. Obviously, stock prices can continue to go lower on this, but long-term, I'm super bullish on NVIDIA. Number 2, I want to say TSMC. I think TSMC has taken quite a hit, and it's one of those that normally, I don't like buying this because I feel like it would just trade with the market. I think right now the market is expecting too much negativity, but growth overall in the long term is still great for TSM. For number 3,
wait. Are you gonna make the chat happy and say the name that they want to hear?
I haven't even looked at the chat. I don't know what a chat
3
is.
letters. 3 letters. That people want to hear, but I don't know if you're gonna say it.
So okay. So in long term, I think AMD is definitely on one of my biggest holdings. I think in the short term, that's one that has a little bit more weakness with the tariffs. And that weakness, again, most of these tariffs news is something that's more weak in the short term, and it's not something that will create any, in my opinion, crazy downturns in the long term of things. But those 2 that I mentioned, NVIDIA and TSM, are ones that even in the short term, I don't believe the short term would be impacted too much. So I think those are 2 on my list. My 3, I guess it would have to be with my 3rd biggest position. I am definitely not selling out of it. But if I could only pick 2, it would be AMD, NVIDIA, and TSM.
What about Micron and ASML and all those? Do those matter to you right now or no?
Yeah. So I mean, that's why I think for the whole semiconductor industry and just for most of the market, it's just a great buying opportunity. You can be looking at so many different companies. And in the long term, again, for companies like ASML, if you're going to see manufacturing continue to be built all over the world, that's going to be great for ASML. ASML is great. Again, if I just had to pick 2, at that point, might as well just start buying an ETF, right? Might as well just stop buying the ETF because I think a lot of the semiconductor players, the equipment players, are definitely going to be benefactors in the long term, as you see kind of manufacturing, not just because of these tariffs, but in the past few years, we've seen manufacturing being built all around the world. TSMC announced that extra $100 billion these past 2 months in the United States. We're seeing kind of companies built in Japan, discussions of building in India, more plants. Even some might be delayed in Europe, but overall, you're building more plants. So anybody in the equipment space has a lot of tailwinds behind them. So overall, very bullish
you sound like nothing's changed in your entire thesis.
I mean, yeah, it's more kind of like that short-term hiccup. I mean, obviously, while tariffs are not directly impacting semiconductors, it does impact kind of like the final product, and a lot of these companies, the final products are like laptops, PCs, and those do still get tariffed. And then you also have the worries of kind of like consumer spending going down. So short term, and I guess maybe it's just because I really do focus on that long-term mentality. Long term, I don't think we're going to any stone age. I don't think AI is going to stop. I don't think we're going to get, I think we're going to get more chips on cars. We're going to get more chips on phones. We're going to get more chips on laptops, and technology is going to continue to advance. In the short term, yes, there could be pressure, but this is the time when I like to go to my wife and say, hey, boss, we need to put more money into the market right now. And this is how we're going to do it, right? So this is the time where I feel like it sucks, but this is where money is built. This is where you go from a few $100,000 portfolio to potentially maybe 5 years from now, $1 million portfolio, right? This is the time when you invest heavily into that, or in the high 100,000s, right? So downturns to me are sucky, but this is the time where my long-term thesis stay intact. And it's like, hey, it could suck. It's only been like a week. It feels like forever. It could last a lot longer. And that's the thing that sucks, right? In a high level overview, 3 months might seem like short, and like 3-4 months, oh, that's nothing. But actually being in the market within those 3-4 months, that's what, like 80 trading days. Every day, kind of seeing your portfolio down and down sucks. But I think in the long term, it's going to be the opportunities that come from here that are going to get me pretty excited. So long term, I'm still very, very much bullish in the Max 7. I think the Max 7 is probably one of my favorite opportunities right now, except Apple. I maybe the Max 6. I'm not a huge Apple fan, but the real Max 6 and the semiconductor industry, that's where my whole focus is in right now.
Well, let's do some rapid fire on some of these semi names, and then we'll get you out of here. Intel. You like it here? No?
It's still too early to tell, but has some benefits.
Okay. SMCI. Are you touching this one?
No, might as well just invest in like NVIDIA and all the other players providing the AI chips.
Okay. So same thing with Dell and HP, I would imagine. You feel the same?
Yep, and it's Dell and HP a little bit more kind of weakness because they do have a lot more consumer products with the PC with laptops and desktops. So I think a little bit more painful for these two players than for Supermicro.
Do you think NVIDIA has margins that get hit badly over the next couple quarters, or they've sustained those 70% margins?
It's crazy, right? Because like I was doing the math, and I might do a video later, but even with these kind of crazy margin price increase, remember the margin, the tariffs don't go on the actual selling price. The margins go kind of on like the cost of goods. So for example, NVIDIA sells a $3 million server, pretty much to say, like the NVL72. The actual product there in total cost of goods, if assuming you have a 70% margins, it's about $800,000 on cost of goods. Now, if you kind of see a 30% increase in there on based on tariffs and everything else, a 30% increase in there, that's about $1.2 million. Margins are still above 60%. So it's not like it's a direct hit in margin levels like that. It doesn't mean like margins are going to go to drop to 30%. So NVIDIA, to be able to kind of take that margin hit and that earnings hit, they just have to raise their prices on their servers by 10%, and they make the same amount of money. Margins might still be lower because obviously the equation changes a little bit. But I think that's the fear and the opportunity that creates that creates buying opportunities, because many people are saying, oh man, 70% margins, and then you have like 50-something+ % tariffs. We're going to see gross margins take a hit to 30. Even if NVIDIA eats up the cost, margins, in my opinion, based on my calculations, will still be above 60%.
Yeah, and given the valuation compression, even with those declining margins, this thing would still be deeply undervalued if they can keep up the top line growth, which, you know, I think all of us think they have a shot to do. Okay, go ahead.
I was going to say, and I think with the current administration, it's not just about making deals with countries. I think they're also going to be making deals with these big tech players. If these big tech players say, hey, look, I am focusing more on investing, there's the possibility. I think it's all about kind of the act of trade or the deal of trade or whatever it's called. But individual businesses, if you're big enough, I think you can make deals with the current administration. And it's just so many so many crazy parts, juggling balls happening here. But I think the market just might be, especially for certain industries, might just be a little bit too bearish. And I like that. Bearish creates opportunities for the bulls.
In general, does this whole tariff, Trump tweeting it's a good time to buy, like personally, are you just kind of like, are you also just like, what timeline are we in right now?
Yeah, 100%. I mean, I guess that's why I'm just kind of focusing my head in and putting my head in the just semiconductor big tech plays where, okay, tariffs are here. This is going to continue to be volatile. Has anything changed? But yeah, it's definitely a crazy time. But crazy times brings volatility, and volatility is where mispricing happens. And when mispricing happens, that's when you can definitely be a very, very great long-term investor.
I think 2 minutes ago you used the phrase juggling balls, and the chat is having a great time with that one. You did it. That'll get them going. There you go. All right, good stuff. Thank you, Jose. WhatthechipHappened.com. This is Jose's semiconductor newsletter. If you're not subscribed to it, I would highly recommend subscribing to it. Jose, yeah, thanks for joining.
Yeah.
And any quick little pitch for the newsletter, and then we'll get you out.
Just newsletter. I just posted something yesterday. I'm trying on a daily basis. Obviously, last week with tariffs was a bit crazy. Today, I'm working already on another one. Yesterday, we did see some pretty cool things, like Broadcom announced a major buyback, which I thought was overall bullish for the semiconductor industry. I talked a little bit about how tariffs are impacting the overall semiconductor space. So completely free for everybody. Just make sure to check it out. WhatthechipHappened.com.
Okay, actual last question. Broadcom, 10 billion, seems bullish. Stock's down 50%. You think the other semiconductors start buying back their stock here?
Yep, I think this upcoming quarter this upcoming earnings we're gonna hear not just semiconductors but big tech players. Obviously, they didn't buy last quarter because it's not included in the tariffs. But they're gonna say that they are accelerating their buyback program, or two, increasing the buyback program. And I think it's for two reasons. First, it shows confidence during a time where confidence is pretty low. So I think the first reason Broadcom do it is, I'm confident about my stock. I'm confident about my value. I'm confident about the AI business. And the second thing is, obviously, it's a great way to kind of use cash at the moment. A lot of these big tech players have multi-billions of dollars, some 40, some 50, $60 billion ready to hand. And I think we will see some nice buyback programs. For one, it's just a great use of equity for them. But two, it's a great way to show confidence to their investors. So I think throughout this upcoming earnings, we're going to see where most people expect big tech to be a little bit conservative during this downturn. We're going to see them be a little bit more aggressive in how they buy back shares.
I love it. Jose, whatthechipHappened.com. Thank you, brother. We will get you on again next week. See ya. Thank you. All right, cool. We have a headline from India, I believe, around tariffs. Why not? I believe this is accurate, but it looks like this is correct. India Trade Minister to CNN says, in constant engagement with the U.S., we will be working with them to take off additional tariffs in the days to come. Okay, good. Again, China and the EU is what the market really cares about, even if India is going to make some deals. We expect India, South Korea, Japan to make some deals. That's basically what Bessent said yesterday as well. So we should get those soon. NVIDIA still above 4%, even with the China volatility and the 84% reciprocal tariffs they put on today. SoFi right here up 2.6%. Tesla still up 4.5%. S&P holding on to just below 500. Again, the rally doesn't feel like it's really based on anything other than the market wants to bounce because it was really red last night, and now it's much more green. Apple right here, 179. But we are getting still a bit of green and momentum. China issues risk alert for Chinese tourists traveling to the United States Culture Ministry. Dude, the China thing is getting... I mean, we said that this morning, right? Like, would there be a world where China or the United States literally bans each other's citizens from coming into the country? Like, I mean, there's just so many ways this can get escalated way further than it is right now in the context of different reciprocal percentage rates. And I guess we're going to have to eventually see how bad this wants to start to play out. This is the coverage right here on the Trump tweet that we saw, which still currently is up right now.
$1.3 billion worth of American goods, including U.S. agricultural products. Now, our Megan Casella points out that's just the beginning of what we expect to see ratcheting up in terms of tariffs from the European Union as their voting mechanism comes into place and they move through the process on their side. So we do expect more from the Europeans at some point. We've also got some reaction now from President Trump on social media. The president urging folks not to panic here. He's putting out a tweet saying, "Be cool. Everything is going to work out well. The U.S. will be bigger and better than ever before." He also put out another post on social media saying, "This is a great time to buy." And he signed it, look at this, he signed it DJT at the bottom of his Truth Social post. Now, that signature line of DJT seems to have gotten some people's attention because that's also the ticker for the Trump media company. And if you look at what happened in the Trump media company, you see that spike right there after the president put this out on social media. Unclear whether people thought he was endorsing his own stock here or whether this was just sort of an automated response as black boxes got in the DJT ticker. But in any case, we are seeing a move now in that DJT number on the back of that Trump social media post. So a lot of moving parts here, guys. Ultimately, this White House is saying right now, stay the course, be cool. Everything is going to work out just fine.
You know, a lot of people.
These are the China headlines. China issues risk alert for Chinese tourists traveling to the United States, and China issues alert for some students studying abroad in the United States. So you got China issuing an alert to all Chinese citizens that are traveling to the United States or that are working and or in school in the United States. We'll see what extent to what that warning means, but that is the warning that they just put out.
People were relieved that Europe went for tariffing goods, but I do wonder if it's premature because, you know, Europe has to get 27 members on board and they have to vote on this. So this was the first action, but I do wonder what's coming when it comes to services. They have the Digital Markets and Services Act. They're trying to regulate AI, and there could be some pressure they can put on the U.S. companies via that, right?
Yeah, it seems clear there's more coming from the European Union. This is just maybe the first of many steps that they can take. And then the other point in all this, and you know, this might be obvious for our audience, but not necessarily for people who are new to this, is that, you know, this is a multi-dimensional fight now. It's not just tariff against tariff. It's the treasury markets, it's regulation.
We got a headline, folks. We got a headline. U.S. weighs farmer bailout as China retaliation threatens exports. Wow. U.S. weighs farmer bailout. That's got to be a source, probably from Bloomberg or the Wall Street Journal, as China retaliation threatens exports. I mean, yeah, you have to bail the farmers out, right? If we don't have the level of exports that we are going to have from China because of the 34% reciprocal tariffs and the 84% that they put up this morning, like farmers are screwed. Like there's just no way. So I wonder what it means in terms of a farmer bailout. I wonder if the United States is willing to take the tariff revenue and give it to the farmers, or how much of that. But that is another thing that we have to look for. S&P 500 is still green on the day, but the rally is starting to fade a little bit more, up about 0.3% right now.
Its efforts to grind U.S. companies down in terms of their market share, all the different levers on the economy that governments have now come into play as countries around the world look at how they particularly are going to retaliate against the United States. So you watch the move in treasuries overnight and you think, is that a retaliation by a nation state such as China, or is that just a reflexive move by hedge funds in the United States to try to reposition themselves? You know, we don't.
What if it's both? What if hedge funds are getting margin called and they have to sell treasuries and China's selling it? I mean, like, that's the real scary part about what happened last night. You don't know what's unwinding, but something for the 10-year to be going up as dramatically as it was is unwinding.
Know that right now, but you have to watch all of that, not just the tariff versus tariff retaliation.
Without a doubt, Eamon. And of course, we have talked about China and whether they are selling our treasury bonds as well. Eamon Javers at the White House, thank you. Speaking of China, of course, retaliation also does come in the form of higher tariffs, and Eunice Yoon joins us. She is live from Beijing, can give us the latest on China's response.
Yeah, well, that's definitely right. In just 2 hours, the Chinese retaliatory tariffs are going to go into effect. And this is after the Chinese had decided to raise the tariffs on all American goods coming into here to 84%. This is the additional tariff, and it was adjusted in reaction to President Trump's also his increase. So this is in addition to that, the Chinese government have named 18 companies that are going to face restrictions in the form of being on the unreliable entities list or the export control list. So this means that companies wouldn't be able to source from Chinese suppliers of dual use items. So all of this matches the general messaging that we've heard out of Beijing, and that is that China is going to stand firm. In fact, in the first public speech that President Xi Jinping had since the escalation, he presented himself as a defender of multilateralism and also said that he would strengthen the ties with neighboring countries. The People's Daily, which is the voice of the Communist Party, has also cited some of his comments recently in an op-ed saying that the best way to weather the storm is to focus with unwavering determination. The Commerce Ministry today also argued that China has abundant means to retaliate. And interestingly, they also tweaked their language around a TikTok sale, saying that a TikTok sale definitely required Chinese approval. Guys?
Who's going to reach out first, Xi or Trump? I mean, it's like impossible to psychoanalyze.
I'm going to ask you guys that question in the chat as well. Who do you think folds first? Is it Xi Jinping or is it Trump?
It's these leaders.
Well, I would think that for the Chinese to make any move, the conditions in Washington would have to change because unlike President Trump, President Xi needs to be seen as the superior person, the one who has been able to save China and be able to rejuvenate this country. So, they cannot be like Xi Jinping and his the people around him would feel that he cannot be put in a position where he could be humiliated or he's seen as a weaker party. It's also part of the Chinese party's diplomatic ideology. So at some point, the conditions would need to change in Washington to allow for the Chinese to be able to even broach the Trump administration.
Okay, Eunice, thank you.
I think China capitulates first, but maybe that's the American in me that just really wants them to capitulate first. 57% of you say Trump folds first. Dude, again, China not backing down from 104% and then retaliating with 84%. That's them basically saying, yeah, we'll play this game. And so it wouldn't surprise me if Trump has to fold first. He would never admit it, but there's definitely an argument that he would have to if it gets really that bad, especially if it kicks the stock market. We got another headline right here from Amazon. Amazon is canceling some inventory orders from China after these tariffs have gone into effect. Don't have anything else besides that. That is the headline. Amazon canceled inventory orders from China. We don't know how much, to what extent, to what products. It makes sense if Amazon can buy cheap water bottle from India over China. Yeah, they're probably going to try to get them as cheap as possible and not have to pay those tariffs, especially if the tariffs get to anywhere near what Kevin O'Leary wants them to get to. That and Walmart are kind of the core retailers this morning that were affected. Walmart with taking out their operating income guidance. Amazon right here with canceling some inventory. Jamie Dimon was on Fox Business today. He said something. Let's take a little bit of a look at that, and then we'll keep going.
Do you personally expect a recession?
I am going to defer to my economists at this point, but I think probably that's a likely outcome.
Mm-hmm. Yeah. Because markets, I mean, when you see a 2,000 point decline, it sort of feeds on itself, doesn't it? Because it makes you feel like you're losing money in your 401k, you're losing money in your pension. You got to cut back.
Yeah. I always remind people markets aren't always right, but sometimes they are right. And I think this time they are right because they're just pricing in uncertainty at the macro level and uncertainty at the micro level, at the actual company level. And then how it affects consumer sentiment, it's hard to tell. You know, consumers still have jobs. Wages are going up the low end, which I think is a good thing. But if companies start cutting back, yeah, the consumer sentiment changes and business sentiment changes. You know, I think you've already seen business sentiment change a little bit. Hopefully, you know, no one's wishing for that, but you know, hopefully if there is one, it'll be short. But but I do think fixing these tariff issues and trade would be a good thing to do.
Do you?
Oh my gosh. Unbelievable, bro. Yeah, we got the Delta headline right here as well. I mean, I think I have some coverage on that. Delta saying that the tariffs are starting to impact them more now as well. That is obviously not what anyone wants to see. Oh my gosh, dude, this is pretty incredible. So you had Amazon this morning, Walmart, and now Delta saying that the tariffs are already impacting their bookings. I would imagine to an extent, again, we just don't have enough unemployment yet for it to really act like it's picking up in terms of recession odds. But that's what essentially Jamie Dimon is saying, is like, hey, this will lead inevitably to unemployment. Delta withdraws its 2025 guidance and says the trade war is hurting bookings. Yeah, there you go. So no 2025 guidance from Delta. That means Southwest, United Airlines, we're probably not going to get it from them either. S&P 500 up about 1% on the day. And Jamie Dimon's argument is, well, if we don't get guidance, we're going to have complete multiple revisions. And obviously the risk of a recession will only get priced in further and further to the upside. This is interesting, dude. This is tough. This is very, very tough. Granted, it sounds so defeated and so bad. And then you remember, this is not COVID. This is not the great financial crisis. This is not it's not any of those things. It's tariffs. Dude, we are never going to think of that word the same again for the rest of our life. All of us. Ever, right? Like the concept, every time I hear a tariff now, I'm going to be triggered. Like I'm just like, it'll be like 50 years from now, we'll hear about the concept of tariffs and I'll be like, dude, 2025. Fucking tariffs. Freaking tariffs, bro. Yeah, where's the stimmies? Can we start printing some checks, baby? Let's just send everybody some money at this point. A little $1,200, bro. I could buy one Saratoga bottle of water with a $1,200 stimulus check. I mean, one Saratoga bottle of water with that stimmy would just be amazing. It's time to print the money. It's time to print the money. Inflation, it's just a number, right? Inflation is just a number. We could print some money. It's like, 2%, 3%. And what's really the difference between 2.3% and 4.7, right? Like, it's not that big of a deal. We're not going to become Zimbabwe overnight. It's not going to be 5,000% inflation. The sad thing about this is and we should talk more about the Fed right now. Last night, a lot of the theories that I saw going around was that the Fed is going to start buying up treasuries, which means they will start engaging in a much more friendlier manner towards quantitative easing. They're probably going to slow down dramatically. I mean, they've already started to slow down quantitative tightening, but it might start to get slowed down even more. But I don't think they're going to cut. I still don't think they're going to cut. Again, credit spreads going as nuclear as they're going right now, it is scary. And it would warrant, hey, the Fed stepping in and saying, maybe we need to cut. But the problem is the thing that's stopping them from cutting, which would be in a traditional downturn, is the risk of inflation going higher. In a downturn, inflation should go lower because growth is slowing down. So the Fed has the room to navigate cutting rates, which is stimulating the economy, and not risking inflation turning into some ridiculous percentage under about, basically 2 to 2.5%. But with tariffs threatening the very nature of how inflation is currently calculated in the United States, with the nature of, how insane the 40, 50, 60% tariffs are across the entire world, Jay Powell can't cut rates. He can buy treasuries, but that doesn't really solve the problem. It solves the problem momentarily. Cutting rates would be a much easier fix of the problem, but it would risk inflation. It's just that simple. The stimulus checks obviously won't help either, so I don't think we're going to be printing money. Could you imagine we had to print money, bro? Could you imagine it got that bad that the solution was that everyone needs a check? That sounded insane that was happening during COVID. But it was that bad. And this doesn't feel that bad, but if it actually got that bad, DJT by still up about 5.82% right here. It really would just be insane. Yeah, Trump is making the stock market affordable again. That is correct. Making America great again and the stock market affordable again. And look, I'm not saying that markets didn't deserve a correction, right? We were trading at almost 25 times S&P 500 earnings. We needed a correction. That's that's inevitable. It's the speed of this correction, 20% down in 34 days, and the reasoning behind it has nothing to do with earnings, which is the saddest part for a lot of people. If you invested in the right companies and took a chance on them, you were able to look yourself in the face and say, I didn't buy a stock for the hell of it. I bought a stock because I saw some fundamental reasoning towards it, but everything else in the macro completely changed the way we ultimately can understand the nature of tariffs. We have Elizabeth Warren on CNBC. Let's watch a little bit of this. I mean, the thing about the Democrats now is they can easily take this situation and say, hey, look at what he's doing. Get him out in the midterms. And I think that is a political angle to all of this that Trump's going to have to navigate over the coming weeks as well.
With tariffs, maybe targeted tariffs, what's different about what the president is doing right now?
So look, I think tariffs are a very important part, a tool in our economic toolbox, but they have to be used in a way that is targeted. We have a specific goal. We are bringing it in with a timing that makes sense, so we're going to be able to manufacture things at home. Take, for example, the pharmaceutical industry. Right now, you've got a 9 out of 10 chance that when you have a prescription filled, that it was made somewhere overseas, probably Asia, and the materials for it came from China. That puts us in a vulnerable position. So using tariffs as part of an integrated strategy to get more pharmaceuticals manufactured here in the United States makes sense economically, makes sense strategically, but that is not what Donald Trump is doing.
So it is a very similar tactic. I've seen a couple of other of the Democratic politicians over the past basically few days, Cory Booker being one of the main ones. Again, he was filibustering for 25 hours. They're going to go home with this narrative. Whether it's true or not, this narrative is going to be their core narrative if we do end up getting a recession. If Trump somehow figures this out, we get amazing trade deals and we don't have a recession, then I think there's a way to save the narrative. Tesla right here is still up about 4.8%, but that I think is their core argument. They're going to say, hey, we are fine with tariffs, but the way Trump is implementing them is irresponsible. And that's going to be their pitch to voters going into the midterms. I don't know. I don't know if that's going to be enough to get them to midterms, but if it's a full-on recession by the end of 2025, yeah, I think 2026. Also, the sad part about 26 is the third year of a bull market is the choppiest, but it ends up being green by about 15%. The fourth year really sucks. And 2026 is also a midterm year, which just historically has midterms. 2022 was also a midterm year, right? Like the midterms just tend to not be the best years for the markets. The market has uncertainty. I know the uncertainty about a Republican House or a Democratic Senate is nothing compared to the uncertainty with tariffs. Like Trump is taking uncertainty to a new level, but still the uncertainty of who's going to actually maintain power in Congress is one of the core reasons why markets really can't find a footing in midterm years. But now with the tariff uncertainty mixed on top of that, it just becomes a lot worse. This is not chappy, it's crashy. Yeah, I mean, I agree. Oh, here's a good question. Someone says here, we are not in a bull market. I think that's a good question right here. Do you think we're in a bull market? By the way, 55% you said Trump is going to fold first, not Xi Jinping. Here's the next question. Are we still in a bull market? For those that are asking why the market's green right now, I believe it's because bond yields are coming down a little bit. Maybe it's a bit of a technical bounce, but there's no fundamental reason that I see for why the market is green. Here's the Apollo CEO talking about tariffs. Let's get his thoughts and see how he thinks his firm, which deals in a lot of the credit markets, is dealing with tariffs right now.
Apollo, one of the most influential and important financial institutions in the world. Good morning to you.
Thank you. Of resetting our trade policy doesn't bother me in the slightest.
Okay, but this is how you would do it, or you're saying this is not how you would do it?
No, it's certainly not how I would do it, but I think it's important that we just step back and think about it. So since inauguration, interest rates are lower. The PE of the S&P 500 yesterday was 21 versus a long-term median of 16. Air has come out of the market, probably appropriately. Unemployment is 4-ish%. 200,000 plus jobs were added. Massive investments are coming into the U.S. How should we have done this? Probably in a more logical sequence.
Okay, well, let's talk about what does that mean. So there was a moment where you were potentially a candidate for being the Treasury Secretary, if you were in Scott Bessent's role and you were sitting with the president and he said, how should I do this? You would tell him what?
Four big markets: Mexico, Canada, Europe, China. Get Mexico and Canada done first, get your budget done. China is its own thing, and then focus on Europe. The goal of what this administration wants to do is the right goal. The way they're going about it has three negatives. The three negatives are, first, that we're seeing is uncertainty. Uncertainty in the short term, and it's a very short term, will keep people from making decisions, keep people from making investments, keep people from making hires. That's not a great thing. We can survive that. The one I worry about more is the second, which is damage to the U.S. brand. What does our brand mean when it comes to long-term agreements, long-term security pacts? This was probably able to be done without damage to the brand. And three is we've increased the chance that we will have some form of accident which will lead to actual market volatility beyond, I'll call, a normal correction. And that's what I think we have right now is a normal correction.
There's so many things embedded in what you said. I want to just unpack them. The first piece was you said that you thought this was a short period of time, meaning you believe that we're going to get deals quickly?
I think the logical outcome is that we should get deals quickly. I was in Mexico City 5 weeks ago. I met with the 200 leading business figures in Mexico, industrialists, leading families, banks, brokers, and others. And I came back and I reported to the administration, to a person, they were pro-tariff, which is a shocking thing to say, because this group of leaders sees the market the way I see the market. The U.S. and Mexico should be positioned to dominate the economic landscape for the next 50 years. U.S. advanced manufacturing, Mexico the workshop, and so on and so on. Why haven't two agreements been able to get us to that position? And if you think about it, there are 5 issues. One is immigration, which is not Mexican immigration, it's Central and South American. It's second, Chinese transshipment of goods. 3 is fentanyl. 4 is AMLO's abrogation of contracts. And 5 is cartels. You ask Mexican leaders about those 5 issues, they want them resolved. One of the leading families said to me, if it takes tariffs to make Mexico great again, so be it. Imagine an administration that stood up and actually said, our goal is to do this. Tariffs are a means to an end to do this. The uncertainty of what the outcome is that the administration wants is creating uncertainty.
Right.
And doing things one at a time. I mean, Mexico and Canada are among our most important trading partners. Putting those two to bed, I think, is much more interesting than going after everyone, everywhere.
I think that makes a lot of sense as well. I mean, his core argument right here is that if they had a core reason behind the way they've implemented these tariffs, there would be a lot more certainty in the market, which is why we rallied on April 2nd when Trump said 10% across the board. The market knew how to price that in. The formula they used to be able to calculate the reciprocal half tariffs, which they're still justifying, makes a lot of sense. I think a lot of economists have looked at it, and you know, it is really hard to kind of figure out how they're navigating it. It doesn't make a lot of sense to a lot of people. So from that perspective, that is what's created uncertainty in the broader markets. I mean, there is I believe on the list of the countries that got the rates, there was a small country in Africa where we import $230 million of diamonds from. The citizens in that country live off of less than $5 a day. So when you take, so they don't buy a lot of our stuff because, you know, when you're living off $5 a day, you probably can't buy a lot of American goods. It's impossible. But we import 230 million from them, so we have a trade deficit with them. And as a result, using their formula, they ended up with a 10% reciprocal tariff. Lesotho, right? Lesotho, yes, Lesotho, which makes no sense, right? Like, how are we putting a 10% tariff on a country that has citizens that simply can't afford U.S. goods? Now, the Trump administration will say, well, that's to make sure that we have a tariff on at least every country so that there's no way that China could like use a loophole and start building in Lesotho or something and avoid the tariffs. That's fair, but it's creating so much uncertainty to the broader market because the broader market has no idea why that 10% on this random country. There's many other countries like that we have a trade deficit with, but that just don't need a tariff because they can't afford our stuff. I think the rollout of that has also been an issue for the markets to navigate. And that's what the Apollo CEO is saying. It is so unbelievably uncertain right now. This is in the midst of that, though, we have a market that's holding up and it's green. But it's like S&P looks like it's about to go red. It looks like it's losing its steam. It's less even about the stock market going red. Now it's just about like the nature of what ends up happening in the economy. Because I think the thing, like, let's say our stocks are down, it's whatever. But like, I don't think anyone wants a real recession. Like, I'd rather have stocks down for a year than having a serious recession, because at least we can recover from stocks being down. A serious recession is just scary. But yes, as someone says right here in the chat, we are in a recession that can be solved with one tweet. And it's not by DJT, unfortunately. It's got to be something else right now. Yeah, the penguins, exactly. The penguins. Like, the fact that we tariff the penguins. Again, it's not like something that's going to actually have any real implementation, but it is what's creating all this volatility in the context of the market. On the poll, 71% of you said no, we are not in a bull market. Wow. Okay, my thoughts are pretty simple. If we have tariffs for more than a month, I think we will absolutely plunge into a bear market if we have these types of tariffs. If we have these types of tariffs for less than a month, at a month, like a month, right? Like within the next couple months, if this is all over, I think we have a chance to save the bull market, and it shouldn't be that hard because earnings shouldn't get destroyed because, again, we avoid a recession. But if the tariffs stay in place, I think we fall into a recession, then yeah, bull market is completely gone. I mean, I know some people would say today the bull market is completely gone. I get it. I think it's fair. I think there's some level of salvaging you could potentially do, but the overall chunk of it is getting hit if Trump does not change on these tariffs. And that's pretty much what Evercore is saying as well. Let's watch this, then we'll end it out for today. This is Julian Emanuel, again, one of my favorite analysts. He is starting to say that we need to be a little bit more worried, but he still has a higher price target on the S&P, and he's bullish, even though things are not looking the best.
Going to announce what was announced on April the 2nd in the sledgehammer form, and you're going to put in numbers that are higher than Smoot-Hawley, the obvious effect is going to be much more market volatility, much more uncertainty, with which we've gotten. And, you know, frankly, the questions I'm getting is, why is it that you aren't going to a recession base case economically? And why is it that you're not going to a recession in terms of earnings? And our view is that as someone who wants to think about the market, there are two things you need to believe in higher stock prices this year. First off, that we are approaching the level of peak uncertainty with regard to the trade issues. We do believe that to be the case. Obviously, it's ratcheted even higher in the last several hours. And then the other is that Washington does not wish to precipitate a recession. Okay, because there are lots and lots of consequences.
They seem okay. Hold on a second. This is a policy team that seems to think that recession is, sorry, this is an administration that seems to have indicated that recession is a policy potential, or that it's essentially it is policy.
All right, we're going red across the board. S&P is now officially red. DJT's getting hit right here. We'll see if some of these stocks can hold their green. It's almost 11 a.m. right now, but we are seeing a bit more of that rally get faded now.
Policy, right? I mean, I guess, so my question to you is then back to the markets, because I hear what you're saying. You're being cautious, and you always are, and I think you're right to be. But on a day when stocks, bonds, and the dollar sold off, you and I have spent a lot of time looking at emerging markets. That's kind of what this feels like. And this is a market that today, to me, felt like a market that's always a discounting mechanism, felt like it was really discounting significant, I think, loss in revenues in terms of a tax structure and a dynamic that I think are the result of where we are 2 or 3 chess moves down the road. So I guess back to earnings season that's coming upon us. I mean, how do you begin to even calculate this?
It's very difficult, Tim. And the fact is that results for this earnings season are completely meaningless. You know, there's no.
I agree. What does it matter what you did in Q1? Market wants to look to the future. No one has any clue what the tariffs are going to look like in the future. So amazing earnings, I don't think are going to be heavily rewarded, and really bad earnings probably are going to be rewarded to the downside, because the market's going to be even more afraid of what your earnings will look like in the future.
Importance to them whatsoever. What it is basically CEOs' willingness to, and not even project forward to the current quarter, to lay out a number of scenarios in terms of what to expect for the rest of the year and 2026. And frankly, the message should be that the attempt to make this transformation is something that economic wreckage is going to make it much more difficult globally to achieve the desired ends.
I mean, Julian, one thing that brings to mind about all this is that something always comes to town. It's tariffs, or it could be COVID, or it could be September 11th. It's a convention, and it's a new one to have a price target in the first place, right? The Dow was what was referred to, not the S&P, until about 1992, as you will know. And then price targets started appearing for individual companies, but not widely disseminated, and then for the market. And now every firm must have a price target. It's arbitrary, 12 months versus 11 versus 13. And you know this too, things come along, tariffs, and it makes the whole model, blown up. Just as you said, earnings could not be more irrelevant this coming quarter. So why not abandon the convention? I mean, why do it?
It's a reference number.
I think it's a comfort blanket. People like to think, this is where they think the market's going. And here's the other thing that's inconvenient about it. Since this has been tracked, and you know this as well, all strategists put out a price target, and it's always calling for higher. Never once as a group have strategists called for a lower stock market, not in any year. I think the whole thing is borderline silly. And it has nothing to do with you personally. I was a strategist on a fundamental side, now I'm a technician, but I never understood it, and I still don't. I'm almost 60.
Well, I will say this, Carter. Go back and look at a chart of the Dow Jones or the S&P going back to 1982, and think about the last 40 odd plus years calling for a higher target year in and year out has been an extremely winning strategy.
Right, but guess what those targets are? They're always 10% higher, which is the average growth of the market over the last 100 years. So I just don't see the value in it, and it's nothing to do with you personally. We've known each other a long time. I'm just saying something that has always been a mystery to me, and I'm still trying to figure it out. I thought someone might have an answer.
Well, no, but I think it's interesting that your target is higher than we are right now, even though you've turned bearish. So you think we're going to rally?
We do. And as I said, it's predicated on the idea that the administration will, in the final analysis, not tolerate a recession. Because if you think about it, the most important piece of legislation that needs to get passed is the budget and the debt ceiling. And frankly, we all know that that's going to require every Republican to row in the same boat. And there's a lot of Republicans that have never voted to raise the debt ceiling. And I would suggest that it's going to be easier to get that accomplished with an economy that's moving in the right direction than one that is, on the precipice of moving in the wrong direction.
That also is actually a really good point. I mean, I think in the context of price targets moving up or down, these numbers sometimes do get arbitrary. Obviously, analysts just pick the average return of the market. If it's a really bullish year, maybe they'll go a little bit above that. But in general, now a lot of the targets have moved from the 6,500 range to the 5,500 range. We're at 500 on the S&P. The ironic thing here is, again, because this tariff downturn is self-inflicted, I feel like this could reverse easily, right? I think it's not crazy to get back to 5,500 within a couple of weeks if you get some deals done and things really move the opposite direction. But again, that goes back to my point that if we have tariffs on for a very long time, aka a few months, it will create some damage that is probably not easy to recover from. But the point about Republicans needing to pass the right legislation for Trump, that's another good point. If your constituents and you're a senator from Kentucky are complaining to you about all this tariff stuff, it's really hard for you to say that, I'm just going to keep voting with Trump whatever way he wants me to go if it's going to keep causing issues with my district and my voters. And you might have some Republicans try to stand up to that. How many of them? I don't know. But Trump's definitely going to need a better economy to be able to get a lot of his legislation passed. And he can unilaterally try to do whatever he wants with tariffs, but it might not get everyone on the same page if he keeps doing it. Jason, thank you for the $100 super chat. Appreciate you, brother. He says, all the Palantir bulls, main reason why you guys follow Amit. You'll be so mad in a few years that you did not buy Palantir this whole time. Cart built Palantir for these times. I've owned Palantir since 2014. So look, I agree. I mean, I think long-term, I want to own Palantir. I've not sold a single share of Palantir. If this thing goes back to 25 or if it goes to 125, it's kind of one of those true long-term holds for me. I do think that the valuation still is aggressive, right? And unfortunately, even though their earnings is going to be amazing, if the macro really isn't good, because this tariff thing at its logical extreme ends up being a full-on trade war with China that is beyond our wildest imaginations, even though it's kind of already getting there. I don't know what happens to Palantir's valuation or Tesla's valuation. I don't. And so do I think it's a good buy right now in this macro uncertainty? No, it's tough to say like this is the easiest price to be buying it at. I definitely don't think you have to sell either though, but that's been my opinion since it got to 40, 50, 60, 70, 80. It's just like I'm not selling, but I also don't see the need to buy. One thing I think that has been true though about Palantir is that again, it's falling with the market, not independent. Now, Jason's perspective yesterday is that's actually kind of bearish because the stocks that are still pretty expensive that haven't collapsed, and maybe you can say 125 to 75 is collapsing, but realistically, I think it more so we can think of that decline as from like 95 to 75. If that collapse still isn't done yet, he thinks that on some really bad days, that could be one of the stocks that's hit the most, which is possible. But so far, it's needed a market correction to get Palantir to go down as well. Yeah, Palantir wasn't public in 2014, but there are a lot of people that bought it in the private markets. I actually have a couple friends who one of the guys I met at the Robinhood Gold event, he bought Palantir in 2018 for like $5 a share in the private markets, and then he sold it I think at 40 or maybe it was 30. But he made a good chunk of money on it, but then he didn't realize the thing would end up going to freaking 125 one day. But yeah, there are people that have gotten in it early. And again, it's just been an incredible story. And the fact that it's held its gains this year, I also think is really, really special, at least so far that it's holding up. But it is also scary on a name like this. Jason's best idea for yesterday was just to get some puts on it, right? Like if you have a multi-thousand share position on Palantir, buying some puts, the worst thing is the puts go to zero, whatever, your position should be fine. If the puts print because the position goes down 10, 15%, at least those puts are more valuable. So I think it does make sense to have a little bit of protecting on the portfolio. I have not bought any puts on Palantir yet. I don't think the $6 put is a bad one, especially for January next year or for April 25th, even though those puts I feel like were more valuable like a week ago. But yeah, I mean, if I do, then I'll let you guys know. But as of now, I haven't really done it. I did sell calls on Nvidia yesterday though. So I sold calls on Nvidia at when it was $100 for 110 expiring Friday. And then for Hood, I sold calls for 42 expiring Friday. I think the weekly calls are easier to manage because I mean both of those would have to go up like what 10, 20%, about 10 to 15%. Dude, a 10 to 15% in a bull market, like pump, you're so scared of the covered calls because that could happen literally in a day, 2 days. Maybe it takes a week, but you could see a 10, 15% markup on any individual name. In this market, it's asking a lot for a Robinhood to get to 42 or for Nvidia to get to 110. And so I think on the weeklies, it's a little bit easier to manage. But yeah, it is obviously one of those years where covered calls or buying puts and protecting positions are not bad. What do you mean by selling covered calls? So again, we talked a lot about it in options 201 or 101. If you type in Amit options 101 on YouTube, you'll find a 3-hour video going in depth on it. But selling covered calls, it's just using your shares as a way to generate premium. So if you have 100 shares of a Palantir at like a $10 average, and you wouldn't mind selling it at 100, you can sell a call to someone willing to pay you a premium to buy that call from you. The reason they're buying the call from you is because you need to cover that call with 100 shares because the definition of call is the right, or it's the obligation, but not the right to control 100 shares. And as a result of that, you can then sell them that covered call. Covering the call using your 100 shares, they might pay $5 for the contract. So that's $500. If Palantir is below that strike price, you keep your shares and their premium, which means they lose all their money on the call. If Palantir is above that strike price, you have to sell your shares at that strike, which would be 100. Now, if your average is 10, you might not care at selling at 100, but you'd also get paid to sell. And if Palantir goes down, your covered calls make money, and then you can write a new round of covered calls. Like, I feel like 2024 was horrible for covered calls. 2025 might be like a great year every week to just collect some weekly income. What uncertainty isn't priced in yet unless a physical war escalates? Dude, if we had a physical war, could you imagine, dude? Trump and China going at it from it like, do I have to join the draft, bro? Like, what? Oh my gosh, bro. This is just insane. Where's the S&P? Are we red? Robinhood's still barely green. S&P just turned red. Yeah, everything else still holding on slightly. DJT still up 5%. Nvidia's up 2%. S&P, though, is going red. Dude, what is there? Is everyone working from home right now, but just staring at their portfolio go to shit? Is that what you guys are doing? It was more fun when you guys got to work from home with me, but Palantir was green and we could just stare at our net worth go higher. But, wow, dude, look, none of you guys work, bro. You know, Steve said this yesterday. Steve called me. He was like, "Oh, I'm taking a day off from work." I'm like, so you mean, or he's like, "Oh, I'm working from home." I was like, "Oh, so you mean you're not working, right?" And he started laughing. I was like, "Dude, no one works from home, bro. All of you guys, like, I've never had a corporate job where I've had to work from home, but if I did, it's home. Like, I'm working, what? I'd be like chilling on the couch with the laptop, just hovering over the Microsoft Teams link to make sure they know I'm active. I know all your tricks. Move your mouse a little bit to show that the green symbol still. I know everybody's tricks, bro. I have plenty of friends in corporate. I've freaking seen these guys make sure it seemed like I was getting brunch with one of them at one time, and he was like, he took out his phone, he started moving his finger. I was like, "What do you do?" He's like, "Oh, I just got the boss needs to know I'm awake." I'm like, "Dude, this is hilarious." Yeah, see, all of you guys, all of you who do that are smiling cheek to cheek right now because you guys know that's how you get away with it. But yeah, anyway, Steve, I was like, "Oh, so you're getting paid to do nothing?" He was like, "I think I'm thinking of ordering a pizza." I was like, "Oh, Ferris Bueller's Day Off, huh?" Like, that's really how you're treating this. That's how you're treating this today. It's just now when you're working from home, you're just seeing yourself lose money. So it is not as fun as before when we saw everything just go green while we're working at home. You work from home? Yeah, that's true. I do work from home. That is true. It's just those of you that freaking work at Salesforce and are supposed to be submitting tickets or some shit, you know, you're just looking at your net worth evaporate in the stock market. Do you think people in offices work harder? No, not really. I mean, obviously, I'm just joking around right here. But like, I mean, you know, people in the office can be just as unproductive as people from home. I mean, realistically, I think it's a blessing to be able to work from home if you have the privilege, especially if you have a family, like if you have kids or, you know, like just being able to get your stuff done and still be able to take them to school and things of that nature. Obviously, that's better than not. But it's one of those things where I think even if you're working from home, you're just like seeing the absolute decimation of so many different things going on, and it's tough. It is really, really freaking tough every day to wake up to this. Like one of the things about work is that you can kind of distract yourself from the market to an extent, right? You can just like not think about it. But if you're working from home and the market's just open, you're able to like tune into the open and you're seeing the pain. It also still hurts. Here's one more update from Bessent, and then we'll end it out for the day. I think he was just speaking at some conference, and then we'll end it out for today.
Secretary Bessent pushing back on weak economic sentiment this morning. Take a listen.
I can tell you that there is a little uncertainty, but that in general, the companies that I've spoken to, the people who have come, the CEOs who have come into Treasury, tell me that the economy is very solid. We got some very good jobs numbers last Friday. So, you know, I think that we are in pretty good shape.
Bill Ackman, Ken Griffin, and all these other Wall Street guys saying that we're not in good shape. I mean, just using the past month's jobs data to say we're in good shape, it's hard for that to be a real argument, given the market's pricing in a lot more of a slowdown if these tariffs continue. So I don't know if that's the best argument to say that things are okay.
I'm hearing a bit of a different story. Of course, other CEOs have started to sound the alarm on tariffs. Our next guest company boasts that 75% of his product is domestically manufactured. And even he says tariff tactics have gone too far. Joining us now is Ethan Allen, CEO, Farouk Kathwari. Good to have you here.
Yeah, it's a pleasure. Good to be here.
All right, I think we'll end it here. And we'll be done for the day. I'll be back at 3:45. Word of the day. There's a lot of different word of the days we can go with, but let's see what Google's telling us. I think scary is one of my words of the day. Last night, dude, 2 a.m., seeing those yields rise, that like was legit scary. That actually, like, thankfully yields are not high as much. But like last night, if you were on Twitter, just like scrolling, everyone was just like, we couldn't believe yields were surging that high at 2 freaking a.m. But it was happening. And it was pretty scary last night. Word of the day from Google is ormolu. Ormolu. Gold or gold powder used for gliding. The antique clock was adorned with ormolu, giving it a regal shimmer. These grand yet excessive interiors featured intricate ormolu and bulle inlays. Gold or gold powder? Well, a lot of people, I guess, are going to be able to have more ormolu in their life, given gold is up freaking 3%, dude. Oh my gosh, gold is still up right now. Shout out to Eric. Thank you for the $10 super chat. The word of the day is poop. I can't say that's a horrible word of the day. Oh, gilding. I said gliding. It was gilding. Of course I said that wrong, bro. Of course I said gliding, bro. How did I get the word in the definition of the word of the day wrong over the word of the day? Gold or gold powered used for gilding. Okay, that's a little bit different than gliding. That's correct. Oh my gosh, bro. By the way, Robinhood did introduce a bunch of new prediction markets. So if anyone wants to gamble their life away, they have the Masters for golf. That came this morning, but they have CPI tomorrow. CPI. They have CPI, Fed funds rate, jobs numbers, all this stuff. So Robinhood is turning into one of those platforms where you can bet on a lot of those different things. But yeah, I guess we'll get a lot more numbers pretty soon and see how this macro data looks like. Robinhood Ormolu. Yeah, Robinhood Gold. That's hilarious. That is hilarious. Craig, thank you for the $10 super chat. All will be fine by the midterm elections. Trump won't risk losing Congress. I agree. I think at some point we're going to see things turn around. It is just a question of when this happens. And if things turn around soon, I think we get to save the bull market. If not, we'll have to see how the market prices this in. S&P still green for the day as we ended out 0.15%. Again, I'll be back at 345. We'll see how this market continues to perform. I do think Trump is speaking again at 2:30, signing executive orders. If not, it might be a little bit later, but I will get you the updates on that once we get back from the break and get into the end of the market close for today. All right, cool. Thank you, everybody. Appreciate it. We'll be back towards the end of the day. We are green for now. Hopefully we can maintain this green. And as we get into the market close, we'll have a lot more data in terms of what's happening throughout the day. And obviously, hopefully, we'll get some more of these tariff updates now that China has retaliated by 84% and the United States has imposed 104%. All right. Thank you, everybody. See you guys later on the market close. Bye, everyone.